Boom, we are live. Welcome back, everybody, to Benzinga Live. Happy Tuesday. What is everyone trading out there? You got President Joe Biden speaking right now. He should be finished in, I don't know, 20, 30 minutes, give or take. But yeah, oil prices continuing to rise. The U.S. banning Russian oil imports. Your big headline from today. Well, that was a good transition. Whoever did that. Just to give y'all a quick rundown of the show today. In a few minutes, I'm going to bring on my man, David Green. We're going to be doing some live trading with Mr. Green. And then Matt Smith, who is the lead oil analyst at Americas at Kpler, will be coming on at 12 o'clock. And then Renato from Benzinga will be coming on at 12:30. We'll be talking some option trading with Renato. Then Christian Fromhertz from Tribeca Trade will be coming on 1 p.m. And then Tim Quast, Market Structure Edge, 1:40 p.m. Eastern. Packed show today, as always. Let's go ahead, get the show rolling, roll that intro, and bring on my man, David Green.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have a
breaking news. Alrighty, guys, let's get David on the show. David, how you doing this morning?
Good morning, Aaron. How are you, my friend?
Hey, man, I'm good. The markets are doing what they've been doing, just being volatile.
Yeah, exactly right, which is good for trading. I mean, the market's been all over the place.
What have you been watching this morning?
We got Mr. Biden's, well, oil's been, number one on our list, and the oil stocks. I was kind of thinking that it would be like buy the rumor, sell the news, and once he comes out and say all this stuff, we'll see a little dipsy doodle in this stuff. But we're not getting much.
I mean, look at the daily candles on Chevron. I mean, we talked about last time you were on, David, how Lockheed Martin, it was so strong, but at some point it's got to get.
I want to show you how that trade worked. I'll show you.
Well, by the way, I got in that trade. I bought Lockheed puts that day, and the next morning they were up 300%.
$29, right?
Yeah, they were up 300%.
Yeah.
Well, first of all, though, David, I bought them, and from about noon to 4, they lost like 30-40% value, but I held on to them overnight, and then the next morning Lockheed opened down like 3 or 4%. But this chart, I mean, I get it. I get why Chevron's so strong. You don't want to, sell into strength, but at some point this has got to get overextended, right?
This is definitely getting overextended right now. As a matter of fact, today would be a good day. If we make new highs in Chevron today, and I know what's going on in the world and stuff, we'll start a little swing trade. We're up at 87 RSI right now.
I mean, come on.
And we are with 20 points, with like 15% above the closest moving average, right?
Jeez.
So yeah, it's getting ready. And I know we all know what's going on in the world, but look, it was going on in limited that day too, right? Yeah, this was it, right? This was the third day. The stock made a high that day of like 458. The next day it made a low of 429. So it's the same kind of chart. And look, it's since made new highs and gone all the way back up. But the trade was when we got really stretched out, got the relative strength way above 80, and it went down 29 points the next day. So I think Chevron is, and we did another one, guys. I want to show you KR, right? This was another one. Kroger. Same setup, guys. We had day 1, day 2, day 3. This stock made a high of 62.50. The same day it went down 6 points. So this was a little swing that we started. I think we started at 61 in this, and we added at 62, and we cashed in on the same day. But yeah, this is getting a little redonkadonk in Chevron. So I think, where are we right now? If we close above 174, yeah, let's close above the highs, and then we'll look to do a little something in that, maybe buy some puts for the next couple of days or something. So that one's definitely on our radar today. And there's a lot of these oil. Have you seen some of these little freaking oil stocks that have been doing?
Yeah, I mean, look at INDO, Indonesia Energy, OEG is another one. Well, here, pull up the daily candles on this. You'll see how crazy. Oh my god,
$6.
It's ridiculous.
No, it was a $2 stock a month ago. It went up to $70 yesterday.
It was $2.61.
I mean, I get it, right? Money's flowing into energy, flowing into oil, so everyone's going to try to find the cheap. No, all the retail, everyone's trying to find.
This is not going to end well, guys.
No, not at all. I'm saying I get why these stocks have run up because everyone's trying to find like the cheap, low float energy that had somehow, even if they're not really, good companies, they don't care. They're just trying to get that spike
look,
up.
It's fine for a trading vehicle, like I always say. First of all, they never let you short these things. Okay,
that's part of the problem.
Right. On any platform you go to, you can't short them, and that's why these low float stocks do what they do. That's exactly why. But yesterday afternoon, I don't want to go back to the chart from yesterday afternoon, but this gave a couple of really good trading setups yesterday late in the day where it hit our moving averages and did exactly what it was supposed to do. Here's yesterday towards the end of the day, right? And now the stock made a high of what? Let's take a look. $86. So I want to show you the first time it came down and hit our 65 EMA, it was around 69. It went up $7. First time it came back and hit our 200 EMA, which is about 56, and it went up $6 in the next 5 minutes. So even these crazy wackadoodle ones, you just wait for technical analysis to set up, and you can trade them. And I always tell everybody, don't do any big size and stuff like this. But when you can make 4, 5, 6 points out at a time on these trades, it's fine.
Yeah.
I mean, none of these, like what you just said, Spencer, none of these are going to end well. It's just inevitable.
Never does.
And the only people who make money in it are the people who are smart enough to get in and out and get a trade. Caterpillar higher today. Well, listen, all these manufacturing stock. Caterpillar is another one, right? Look at the daily. This is the first day in Caterpillar, but this has come a long way.
Caterpillar and Deere both have been. I mean, it's not just them, obviously. It's almost everyone out there, but they've been having a rough go of it.
Well, let's look at Cat on a daily chart.
And he's done. So that was about what, 15 minutes, I think, maybe less.
For what? Biden's done now?
Yep, he's done.
Right, so let's go to the SPYs now and see what kind of real move we're going to get in the market now that he's done. And we'll check out oil and all that other stuff. All right, so SPYs are almost on their lows. We just bounced $1 off the lows. Let's see what oil's doing now.
I just want to welcome everybody coming over who is watching our Joe Biden stream. This is Benzinga Live. This is our midday show that we do every day, 11:30 to 2. I'm getting the signal that our stream has not ended yet. So Aaron's going to signal me when it does.
Excellent. So we're right in the middle of everything now, guys. There's not much trade setting up. So why don't we take some questions or talk about some stocks that anybody wants to, or anything you guys want to?
I'm going to say what I just said earlier. I want to welcome everyone who's coming over from our Joe Biden stream. This is Benzinga Live. This is our daily show that we do every day right here on Benzinga's YouTube channel, 11:30 a.m. to 2 p.m. Eastern time. We're on with David Green right now. And we're just going through the markets. We're going through trades. We're going through setups. So drop your questions in the chat, and we'll take a look. Oh, symbols are flying right now. We're not going to look at... Okay, you know what, David? Fine. You want to look at CEI for us? CEI is another one of these garbage names that is just being pumped. I mean, I don't know.
Yeah, let's go to this one first, ISPO, which was a little garbage name that was $9. That
garbage
to $108, right?
Oh my gosh!
Now it's actually coming to a little technical level now, around $15. So I might start looking at this thing actually around $15. That is our 200 EMA on a daily. This was an IPO at like $9, right? And I think 4 days after it opened at 9, it went to 108. But it's finally coming to a little technical level around $15. So I might start taking a little peek at that one if we get down to around 50.
All right, I'm being told I don't have enough. I'm being criticized apparently. I don't have enough energy. You guys want energy? That's the problem. We don't have any energy. That's the problem. That's why we're here. We're dependent on Russia for our energy. I'm dependent.
Yeah, but isn't it a stat? We get like 3% of our oil from them, or maybe 8% tops.
Something like that.
Yeah, I mean, I don't know. Who knows? You know what? There is, again, I'll go back to this all the time, right?
I don't know.
It's uncertainty. The market just hates uncertainty. Anything that you put in front of this market, we can swallow, we can take. But with all this uncertainty and that, it's very difficult for the market to climb this wall of worry with this much uncertainty out there.
Man, there's just so much unknown out there. There's a war, and if that wasn't enough, there's inflation.
That's right.
All right, that totally caught me off guard. I don't know if that caught the rest of you off guard. So whoever did that, thanks. That's a great segue into my point. Pump and Powell. Next week we have a Fed meeting. They're going to raise rates a quarter point, probably, most likely. There's like a 94% chance that happening.
With this, they're raising a quarter point. Yes.
Yeah, and so it's like, do they go more? Do they signal that they're going to go more? I don't know. We're going to find out. So welcome everyone. If you're new to the show, this is a pretty casual thing we do. We just kind of hang out. We talk stocks. We look at charts. We talk about the market, and we just kind of shoot the shit.
We YOLO trade with David Green.
We also do YOLO trades. Well, him more than me, but I can do them on occasion. So
that's a good point. Someone just mentioned the VXX, and should you be buying some of this for protection? The only time I ever buy VXX is for a trade, right? And this thing is built to go to zero, and it does.
Yes.
This thing has gone up and then reverse split like once a year for the last 10 years that it's been around.
You remember the day, David, where it went?
It was the Volpocalypse.
Volmageddon. Wait, what was it? What was the fund?
It was XIV. It was the inverse VIX.
XVI. Everyone was
out of business or something.
Yeah, it was 2016. I think it was the inverse VIX ETN. It went to zero. It literally went from like whatever it was 40 down to zero in one day because of one random volatility spike. And people, I remember like for whatever reason, I remember like people.
Or they came out and said they were going to delist it like midstream.
Yeah. They shut the thing down like that day. It was like a really weird thing. So, and the takeaway here is VXX is a weird instrument. It is designed to kind of track the VIX in a way, but it's designed to track the VIX on any given day. But beyond that is anyone's guess. Definitely not meant to be bought and held. I can't speak. But
yeah, I mean, right now they all look good because the market's down, right? So again, we got to go to technicals, okay? And the spiders, really, the only thing we have now, and maybe, I mean, we have a double bottom that we made on that panic day, right? When we were down to 411 or whatever it was, this day, right? That was after four straight days down. That was your capitulation.
But we're not far off that now, David. No, we're not far off that.
We're not. We are not at all. So, we talked about this. I've talked about it a bunch. I have to go to a weekly chart to find good support in the spiders, and unfortunately, it's down around 355. We had that conversation last week.
Yeah.
So, I mean,
there's not a lot to like. I mean, I looked this morning. I looked at the top, the 50 best performing non-leveraged ETFs of the year of 2022, and of the top 50, 48 of them were some form of energy or commodity fund. 48 of the 50. That's it. If you've been in energy, if you've been in oil, if you've been in commodities of any kind, you're having a good time right now. No and if you're in anything else, you're not.
It's not fun.
It's
not fun. So hopefully some of these big hedge funds are, they have a little bit of that to offset the major losses that they're seeing right now.
The jump shot, is that who it is in the chat? Just dropped PayPal in there. PayPal made a new low of the move yesterday. If you're buying PayPal now, man, good luck. Maybe David can give you a level or something, but like that thing is.
I'll tell you what we did in PayPal, and we swung this stock, right?
Look at this.
This is the day we swung it when we had that big. After the 4 days down, I think we started buying this at 96. It made a low of 94.50, and then went up 16 points from there. But this is ugly again now. No, I would not be buying PayPal. And again, I'll do it for a trade if we get really stretched out for 3 days again, and we have an RSI. But for a long-term investment, there's nothing here. Absolutely nothing here.
How do you come in? You're trying to be a hero. You're trying to catch a falling knife, and maybe you'll catch it.
What about why is Microsoft down 3%?
And again, you'll catch it for trades, and that's what'll happen with this thing. The stock went up 15 points if it was really oversold, and the same thing's going to happen again. But that will not be in my long-term portfolio anytime soon.
Well, to answer Aaron's question, why is Microsoft down? The whole market's down. It's down with the whole market.
Again, Microsoft, Apple, Nvidia, all these things.
They're all down.
Market.
Yeah, they're all down.
But these are the kind of stocks. Look at Microsoft now. Okay, we're getting there, guys. Right?
And you know what though? We were talking about this morning. Like, if you do want to buy stocks, like if you want to like enter long-term positions, make some new long-term investments here. Like, what do you want to buy? I would much rather buy a Microsoft or an Apple today or this week or this month than like a PayPal or like some other random Fubo, great example. You know what I mean? Like I would rather buy Microsoft and Apple than Fubo or PayPal, right?
Microsoft, Apple, NVIDIA are probably the three on my list, because you know when the market turns, those things are going to turn.
What about Netflix here? Netflix is sitting at 50% of its share value from 3 months. I mean, 3 months ago it was a $700 stock. It's a $350 stock now.
If you loved it at 7, you should. If you liked it at 7, you should love it at 350.
All these value investors.
Look at the RSI. Look at the RSI on Netflix. Things like non-existent.
It's 25. You never see that. I mean, I don't think you've seen that probably going back 10 years. Look how far back I'm going. No, I'm serious. Look, I'm looking for a 25 RSI on a weekly chart. I've gone back 4 years. I can't. It hasn't happened.
So you're saying it's oversold?
It's an understatement.
Is that what you're saying, David? I'm just trying to clarify.
Again, I'm looking technically. I have no support on a daily chart. I have no support on a weekly chart. So, again, if we get to a 20 RSI on a weekly chart, I think you can start buying a little and putting it away. But again, there's so much competition with them and everything else. I mean,
it's tough.
Even for my long-term positions, I'm a technical trader. Even for Apple is what I'm looking at. I'd love to see Apple.
Oh, that's a nice little green candle on the SPY right there.
Yeah, just ripped up.
5 minute candle.
Yeah, let's take a peek. So hey, look at this. All right. So
I bet you Apple's up the last 5 minutes too.
Guarantee it probably just went up $1 if we go look
at
it.
David, can you pull up like a FSLR for solar right now, or a TAN or something? I just want to see. I for whatever reason decided to come on this show. Oh, this is silliness. So this is not. So it's reacting to what Biden just said. Correct. But we knew he was going to say that. We knew he was going to. He's said it repeatedly. He said it during the State of the Union that we need to invest in clean energy. This move. I'm surprised. Whoever just said that in the chat, I agree with you. I'm surprised to see the market react this way.
It'll take 5 years for clean energy to travel through to make First Solar make any money.
This is interesting. Okay, so do we have a trade here, David? Because it's
sitting right on the daily level at 80.34. Exactly. Okay, let me go to weekly. See where we are there. And the weekly. So this is a huge spot, right? This is a huge spot right where we are right now. If we clear these levels, the next spot is 85 on a weekly, and the next spot is 88.
Wow. I mentioned earlier
right here.
I mentioned earlier the fact that obviously commodities have been the only good trade this year. Solar has not been nearly as good, but it's also it's at least up. Solar is up this year. Solar is one of the few areas that's actually green for the year.
Guys, so this double top in Myrna, okay, guys, 130.63.
Myrna,
pop a little order out there, double top in Myrna.
Realize we're trading Myrna.
We trade everything. Something sets up for us to trade. We're trading.
David, earlier we were talking about Chevron. You said if we get new highs of the day, we're approaching there. Potential double top setting up. Well, I'll let you look at the chart.
I threw an order out at 177 because that's where we have a little resistance in case it does that today. But I'll look towards the end of the day. And if it's hanging around the highs, we'll start a little tiny swing trade in that one.
Got it. So just looking to see if it's able to clear that previous highs of the day or not.
Correct. Yeah, even if it doesn't, if we hang around here, around the high of the day, I'll still look to do a little something for the next couple of days. I mean,
Green Car wants you to continue talking about CEI. I guess we interrupted you.
We'll take a look at it.
Sorry,
we're up 8 days in a row in Chevron. We have almost a 90 RSI, and we are 20 points above the closest moving average. Now, again, guys, that doesn't mean these things keep going higher from here, but I think it's a good starting point, and that's what we look at. It's a good starting point to get involved.
It is a little alarming how congested the rotation is. Typically, things are always in favor and out of favor, but as I said, almost everything is out of favor right now, with the exception of energy and commodities, and to some extent solar and utilities. But everything else
and defense.
Okay, fine. Lockheed Martin, Raytheon, any defense contractor. You're right. That's fair. So, but out of those 5 areas in the market, everything else is pretty much getting creamed. So,
all right. You want to talk about CEI?
Yeah. While he does that, I'm gonna go get my laptop. I'll be right back.
Why are we talking about CEI?
Because it's a meme, David.
Yeah, I mean, guys, at this
would be
point,
a meme if it went up to $15. I mean, it was 80 cents and it went up to $1.90.
At this point, all these cheap energy stocks have already ran up, right? I'm not going out and buying this after it's already been up 100% the past week.
Guys, this is a meme, okay? Something that goes from $1 to $2 is not a meme. BNTX, you're in short. Hold on, Andy. Let me take a look. BNTX, 5 minute. Oh, beautiful, guys. Okay, guys. So here's a trade that we posted in our room about, I don't know, a half hour ago. BNTX going from 127 to 129, hit our 200 EMA and just gave almost $1 trade. So again, technical analysis. This thing was, look down here too, guys, from this morning. And guys, anyone who's watching, my email is dgreen927@yahoo.com. You guys can come in and hang out for a week and watch us. Look down here to pivot point, 121.30, support. It went up there about $3. Here's our resistance, 129.02, and it just gave a nice dollar trade. So these are the kind of trades that we're trying to capture. And again, we're day trading, guys. These are the kind of trades that we try to capture all day long. And there's some people in our room that are trading 10 shares at a time, and there's some people in our room that are trading 1,000 shares at a time every time they make one of these trades. And we try to get a few of these trades every day. They add up to a little bit of money at the end of the day, the week, the month, and the year. That's what we're doing in here. All right, CEI is not worth talking about. Not really.
Hey,
it's not really.
Hey, he said it, not us. Don't everyone go hating on us for we didn't say that. Although I would say it did.
Yes, it did go from 60 cents to $2. I see that, and that's great. First of all, you have to have 10,000, 20,000, 30,000 shares of this for it to be worth your while to do anything. But when we're talking about meme stocks, we're talking about INDO and we're talking about ISPO. We're talking about these things that people have just ran up for absolutely no reason. DWAC.
Wait,
DWAC's actually been crushed the past couple days.
Yeah, but it's still been good. I mean, net. Let's put it.
Have guys in your room been trading DWAC a lot?
Yeah, this was a far from moving average trade we got down here this morning. Check this out, guys. On a 1 minute chart, this stock on a 5 minute chart went from down 11 points, and we had a pivot point there, and it went up straight up $5 from here. This is another one that's not shortable on any platform. So when they want to run this up, they can do whatever the hell they want with this thing. But here, guys, check this out, the daily chart. Isn't this crazy how technical analysis works? That came in. Yeah, look at that. We had a daily 65 EMA right around 71.50. It went like 80 cents below it, and it's up $7 from there. I mean, I'm not going in afterwards and putting these lines in the charts, guys. These are there. If you went to a daily chart at DWAC while it was getting this smackdown, it hit that level, went about $1 below it, and has gone up 9 points. So
it is worth noting that over the last few minutes, everything has kind of turned here, and I use that term gently or lightly. I mean, yeah, I wouldn't quite call it a big rally, but the Qs, the SPY, the Russell have all bounced here. I mean, the Russell's green for the day. Whoa, didn't realize that.
From a trader's perspective, this is a big move. Right? The spiders have just gone from 415 to 418. That's a gigantic move. That's 30 handles in 20 minutes. So I'm looking where I could short it now. Right. So I'll look. First spot to short it is this 418.60, and I'll definitely be short at 419.69. That's our 200 EMA. Can we short NVIDIA at 214.80? Let's take a peek. No, I would wait for double top in NVIDIA now about this point. Guys, for certainly everybody in my room, this market is just a little too volatile right now. I say we hang out. We'll wait for extremes before we're going to do anything and let the market do what it wants. In CEI at 79 cents. Good for you, man. That's great. Wow. Oh, that's great. I mean, that's beautiful. I get messages from people who are, in AMC at $3 and they still have it. I don't know why they still have it. It went to $73, but I think my thesis in AMC has been right since me and you guys started talking, right? And I think it was up in the 40s when we started talking, and I still have the same thesis in AMC, and it's not positive.
I mean, just like we always say, it's not a loss until you sell. It's also not a gain, and it's not a profit until you sell.
That is correct. I was actually looking to buy a little GameStop for maybe the first time in my life, other than trading it a couple of times, if we got down to this 81 level. Wow. They have earnings coming out 317. Not till next week. But that's a 200 EMA on our weekly chart around 81. It was actually, might have bought that one for the first time in my life.
All right, just a quick plug. We're going to have David on for a couple more minutes. Then we're going to pivot to a conversation about oil. We obviously just had the Biden press conference there. So Matt Smith will join us. He's the lead oil analyst for the Americas at Kpler. He'll be on to break it all down for us. That'll be at noon, so in 4 minutes from now. So
excellent. I'm going to start shorting oil in a little bit here if we get much higher from here for a trade anyway.
This guy that's on CNBC right now went to my high school.
Did he really?
Jim McKelvey, the CEO of Square.
Not while you were there.
No. He went to my high school like 15 years before I
was
did.
going to say.
What have you done with your life, Aaron?
Guys, some of these CEOs are 21, 22 years old, so it's not.
Yeah, Aaron. Wait, he created Square. What have you done with your life?
Not create Square. I don't know. He might have been older when he did. No, he might have been like 28.
You're here.
Yeah, and what's so terrible about that?
No, I'm just I kid.
Both of you guys. If I had your guys' money, I'd burn mine.
I don't know if that's true,
Matt,
David,
you know I got to ask every week, right? You still engaged? Everything good?
He is.
Wait, why do you always ask me that? As if something's going to change?
Sure you're okay, that's all. I don't know. Something's changed. I want to make sure you're happy.
Yeah, no, right. Yeah. You can set it and forget it on that.
Good.
No stop losses. No stop.
Married?
November 6th, I think.
Yes, wow, that's not too far away.
No, yeah, got about what, 8 months, 7 months, so 8 months, right? Yeah, so
beautiful.
Yeah, David, I guess we just haven't gotten our invites yet, but I'm sure they're on the way.
Yeah.
No one's got. Are you kidding me? The protocol is not is sending out invitations 3 months prior. That's the
correct.
That's the protocol. David knows. So
yes,
no one's got an invitation. Right? So take it. Take that and I don't know.
Oxy CVX is. Yeah, I don't want to do a double top in CVX, guys. I want to start swinging that. We'll wait till the end of the day. We'll start swinging. All right. I know we only got a minute or two left, guys. If you're out there trading, be careful. Wait for your technical analysis, dues levels. I'm not ready to do anything long-term in any accounts yet as far as I'm concerned. And look, this volatility is good for trading. Congratulations.
That's it, man. That's it.
DGreen97@yahoo.com. Come on and visit. Thank you guys again, as always, for.
All right. Have a good one, David.
With you. You guys too. Enjoy.
Until next time.
All right. Let's talk oil here. Matt Smith is here with us, and there's David's email on the screen. Matt Smith, as I said, is the lead oil analyst for the Americas at Kpler, and I'm sure he's got thoughts. Well, everyone has thoughts, but some thoughts are worth more than others, and Matt's thoughts are worth more than ours here. So let's bring Matt on the show. Actually, let's give him the special new intro because he is a new guest. So. Hey, Matt, how we doing?
Doing great, thanks. How are you?
Doing fantastic. Can I get your reaction real fast to the presser, the news of the day, probably in energy markets that the U.S. has reversed course here and gone ahead with the embargo on the Russian oil?
Yeah, it's absolutely wild. So even though it isn't necessarily a huge influence in terms of percentage terms of how much the U.S. is pulling in, so because the U.S. pulls in about 6% of its oil and products from Russia, this is very much a symbolic effort. Obviously, the U.S. is going to have to source that product from elsewhere, but really this is sending a huge message to Russia, one that they just didn't seem to be willing to do just a couple of weeks ago or that. So yeah, it's a huge development for sure.
And then just to be clear, because Aaron and I seem to have conflicting information, the U.S. did this without the participation of their allies, of the EU, right?
That's correct, yeah.
Okay.
So the situation is very different between the EU and the US. Europe is hugely reliant on Russia for its energy needs, and so it pulls in like 40% of its natural gas from Russia. It pulls in, a quarter to a third of its oil as well. And so the US is very much a marginal player in terms of how much it's pulling in from Russia. But given the sway of the US, its stance, as with its ally of Europe there, to come out and do this, it's really, like I say, more of a symbolic thing. It's escalating its concerns with Russia, and so this is really going to develop into a new situation from here on an economic scale.
And so let's talk about that for a second, because this war has upended many economic models, projections, predictions for the year, in terms of the European economy, the global economy in a lot of ways. What are the ramifications, symbolic as they may be, in terms of like the global oil market?
Yeah, sure. So another thing as well is that it's symbolic in terms of the grains market as well. So, you know, Russia and Ukraine are producing, I think it's like a quarter of the world's wheat. And so that has huge ramifications. The reason I mention that is because as we see oil prices spiraling higher here, it just means that we're going to have increasing inflation coming through. So that's going to happen on a global basis. If you think just specifically for the US, the key driver of gasoline prices at the pump, is the price that is the cost of the input, that oil price. And so what we're seeing just today is record gasoline prices on the national average here in the US.
Yep.
And the challenging thing with that is that it takes time. Gasoline prices worked on a lagged basis. So they are still working in the price increase of the last couple of weeks ago. And so what you're going to see going forward here, not only are we hitting a record at the pump, but that record is only going to increase over the coming weeks here as it works in all that increase. So that's the really worrying thing.
About how long is that lag, Matt? How long does it take for the prices to, and this is maybe it's different for all commodities, but for oil specifically, what is that lag time like?
Yeah, sure. So it's probably a week to 2 weeks in terms of the lag,
Okay.
where it change. You see that index change, the exchange traded contracts working its way down to the regions, to the racks, to the prices at the pump. Yeah, so it's a week to 2 weeks. But yeah, the challenge is when prices are rising so high and so fast as they are at the moment. You know, we've seen like 56 cents, something like that, added onto the national average in the last week, and so we're just on an absolute rip, and that rip is going to continue, unfortunately.
Matt, something that I thought was interesting was the Biden administration essentially said last week, hey, we're trying to ramp up, energy production, but there are about 9,000 leases for oil rigs and like drilling locations that are not being utilized by oil and gas companies in the U.S. right now. Why do you think there are so many leases being unused? If gas prices are so high, it seems like it'd be a very lucrative time to be drilling and produce oil.
Yeah, sure. Well, perhaps those leases are just not in the places where people are wanting to drill, so they may not be particularly good areas. And so don't let that be misleading what the US administration was saying there. US production is really ramping up here. And so even prior to all of this, as oil prices were increasing last year, you were seeing increasing production. And the higher the prices tick, that's only going to incentivize more production going forward here. So that's going to be coming through. But the challenge is that you can't just like flip a switch and just increase production. It takes labor, it takes equipment, it takes the drilling, all these different things. It works, again, like gasoline prices, on a lagged basis. And so it's not quite as simple as just turning that oil on. But that will come for sure as you see prices 120, 130 here.
But as prices stay high and it incentivizes more production, that will increase the supply and then hopefully kind of balance out those prices.
In theory, yes. But
in theory.
Everything is in theory.
What prices are pricing in now, though, is the loss of Russian supply. And so as US production may be increasing in the coming months, it's only going to be plugging the gap for, 2 million barrels a day of Russian production or Russian exports that have been shunned, that Russia is now going to have to keep floating on a vessel or put into a tank. And so that's the situation you have here. Why prices have rallied so much in recent days is the realization that we're going to have a material loss of supply in the coming weeks. And we need to find that from somewhere, or it has to be priced to be pulled from somewhere else.
I have a solution. This just occurred to me just now. We should all just go back into lockdown. Just everyone just bite the bullet, go back into lockdown. Don't drive anywhere for a month. Then we can get through the problem, huh? Who's with me?
Oil prices will go
negative.
Oil prices will go negative again.
Who's with me? No one else.
You joke about that, but like in Europe, they've been saying, everyone turn down your heating a little bit, put on a woolly jumper, which is a European word for a sweater,
Right.
just to try and cut down on energy. And so, because we're so separated from it, we're only seeing the increase at the pump of that. The Europeans are really worried about losing that supply, and so they are in that situation now where it's not beyond the realms where they will start to make behavioral changes, not locking down per se, but making certain changes. Yeah.
Matt, is it worth it to try to even venture a guess as to how high oil could go, or is that just not a fruitful exercise?
It keeps changing every day. Yeah, so I could tell you a price now, but it may be completely written off by next week. So this is what I will say. As that supply concern gets priced into the market, prices continue to tick higher from here, and so it seems that we're going to continue to push higher here. So whether that means we're going to get to 140, 150, that's the difficult thing about what we know. What we do know is that we're not going to suddenly see prices drop down to 30, 40, $50 or something like that, because this is a supply issue. It isn't necessarily some wild speculative element that's going on with the market here.
Is it fair to say that the only way out of this predicament is an end to the conflict in Ukraine, and therefore theoretically the ending of sanctions on Russia from there?
That's the way that all prices would likely drop, yes, if there was some end to the conflict, and then the dominoes from there. Yeah, for sure.
Man.
Matt, so it's
not a good situation to be in.
Before you hopped on and Spencer and I were chatting, we were talking about, and I understand that the difference, right? The U.S. is a lot less reliant on the EU in terms of imports from Russia, but we did get this headline from this morning from Reuters that I guess EU is at least working on a plan to cut Russia gas dependency. And what I find so fascinating is in the EU, different countries are in different positions. For example, France has a lot of nuclear energy, and they actually produce more than 75% of their energy through these nuclear plants, whereas Germany has essentially phased out pretty much all of its nuclear plants. What's kind of I see LNG, liquefied natural gas, as kind of like a stepping stone toward maybe more sustainable energy. Could this be a big tailwind for U.S. LNG companies that would then we could export the LNG to Europe, so they're not getting it from Russia?
Yes and no. So it's really already happening. So the US is running full throttle at the moment in terms of hitting record exports of LNG. And those are getting pulled towards Europe simply because Europe is the highest priced market in the world. So it's pulling those LNG cargoes away from, say, going to Asia instead into Europe. The kicker is, though, that Europe cannot import enough LNG. It doesn't have the facilities in place or the capacity to take any more LNG than it has been. Back in January, it was a record, basically 100% of what they could take, they were doing. And so that's the thing. For Europe, they've just looked to Russia and have relied upon them because it's simple just to get that cheap natural gas, that cheap oil coming through a pipeline, rather than importing it from, say, the other side of the world. And so that's why they're in that situation here.
What can you just explain, explain like I'm five, why is LNG, why are proponents of it, why is it better than other oil and gas products?
LNG is liquefied natural gas. It's simply just natural gas. And so that's what Europe is pulling in on predominantly by pipeline from Russia, but it's much cheaper. So say, I don't know, $6 an MMB or MMBTU, something like that. In the US here, it's also cheap. It's below $5 MMBTU, but you have to liquefy it, which means freezing it to like minus 250 degrees. It then condenses it, turns to liquid. You put it on a vessel, it goes all the way across to Europe, and then they have to regasify it to turn it back into gas. So essentially heat it up again. And so to do that, it costs a lot more than it does just to get it from a pipe from Russia. So that's why that's the difference, simply.
Matt, in the U.S., we very famously or infamously had a gas and oil shortage in the 70s. What do you think the likelihood of that happening to us now is?
It's not likely at all. So
Okay.
the US is just such a large producer of oil and gas now,
Okay.
and particularly on the gas side, like I just mentioned, we're exporting as much natural gas as we possibly can. So although the US is under the influence of global prices, so we'll still have to pay up at the pump regardless as all prices rise here. Shortages are not going to happen just because we're producing, well over 11.5 million barrels a day of oil ourselves here.
That at least makes me feel better, even though we are, like you said, at the mercy of the global market in terms of what the price and what we're paying at the pump. Matt Smith is the lead oil analyst for the Americas at Kpler, joining us here on Benzinga Live. Matt, thank you for coming on today. We appreciate your insight, and we'll have to have you back on again soon as things play out here.
Great. Thanks for having me.
Thank you, Matt.
All right. Man, I don't even know like what to say anymore. Like, when is it going to end? When is the global chaos going to? It seems like we're on year 3 of this now. We're on year 3 of just global
Spencer, I've
chaos.
always been taught that things happen in threes. So if we have COVID, Russia, Ukraine, then there's a third thing coming. I mean,
maybe you're right.
Maybe the third thing's better. Maybe it's worse. I don't know. But
yeah, bad things come in threes.
Oh, bad things.
And this is only number 2,
yeah.
right? Unless there's another thing that we're missing in between this and COVID, which is entirely possible. Yeah. Okay. Let's start taking some guesses. What is the next Black Swan event? Christian Gallagher wants to know. He's asking the right questions here. Well, we have war,
inflation, but inflation is, I would say, connected to both COVID and the war.
But
maybe not the war.
I would almost. It is, everything's connected. But you know what? There's your third thing right there. That's a separate issue.
No,
you don't think so?
I'm not buying it. Well, dude, the reason new cars are so expensive right now.
There we go. Jump Shot's got it right there. That's the Black Swan.
The shift being banned.
This is the real problem.
The shift being banned
is the owners can't get their shit together. That's the real problem here.
No, Elite Trading. I'm not BZ Aaron in the BZ Discord. AT, are you BZ Aaron in the? Yeah, that's my boy AT.
That's the other Benzinga Aaron here.
Next Black Swan event is AB having a girlfriend. I walked into the office today and I just started getting roasted by all these people, and I guess it continues. I guess today is just roasting.
Oh my gosh,
that's funny, Patrick.
Anyway.
I'll give it to you. Yeah, I give it to you. That's funny.
Anyway, so okay, it's 12:13. We're gonna have Renato on this show. Renato from Benzinga. He's one of our. He's basically our fintech editor, but unclear which he also trades. It's unclear which of these things is his main hustle and his side hustle. Is Benzinga his side hustle, or is trading his side hustle? We'll find out, because he also spends a lot of time trading. He's got his own systems and his own models, and he's comes to it from a very intellectual standpoint. So we're gonna have Renato on the show in a few minutes here to just walk us through whatever trades he's making and why. Hopefully he can explain them to us. We're gonna have Christian Fromhertz on at 1. He's one of my all-time favorites. He's a great trader. He's on Twitter at @CFromhertz. And we'll have Tim Quast on the show at 1:45 today. Also, I do have a discount code for Tim Quast's platform. I got a discount code from Market Structure Edge. I'm gonna sit on it.
Oh,
I'm gonna wait.
Wasn't Edwin supposed to come on this week?
It's tomorrow.
Tomorrow. We're talking about which company with him again?
I
thought it was a bigger name.
I don't remember, but that's on tomorrow. Yeah. So. By the way, guys, we got a lot of new guests this week. Anyone ever heard of Insider Weekends? It's a weekly. There's basically this guy, Asif Surya. He's been publishing every single week. He publishes a list of all of the biggest insider buys and sells in the stock market for that week, and he comments. He's been doing it every week for 8 years, I think, or 10 years. And he's coming on the show tomorrow.
Oh,
to talk
ask him about Asana?
We can ask him about Asana, yes.
Yeah. I also, Spencer, before Wait, when's Renato coming on? 15 minutes?
12:30. Yeah.
Can we check in on our 2022 stocks of the year? Because last time we
Sure.
did, I was in dead last.
And you had,
I think, or maybe I was second to last.
You had solar. You had Sunrun.
I had Sunrun. Where am I at now?
You, my friend, are in. Is this?
Can you share it on the screen so we can all see?
Yeah, I can.
You refresh it. You gotta refresh it.
Yeah. All right. Well, it is. All right. Fine. I'll refresh it. I think you're near the top.
I went from being dead last. So this is a lesson in
buy and hold.
Well, we talked about this yesterday, Spencer, with Warren Buffett. You know, you said his tolerance to just get beat up and stay in the market, stay true to his conviction is really what's allowed him over his years to be such a prolific investor. I picked Sunrun at the beginning of the year. At one point, it was down like 60%. If that was a real position, I probably would have sold some. But now it's up.
This was a contest that we ran in January. We asked if you're whoever was watching our show that day could enter the contest and pick their stock of the year. So we only had about 24 people enter, and Aaron Bree is sixth. Excuse me. Aaron J, whoever Aaron J is, I don't know who that is, picked Valet. Is absolutely destroying the field right now, like crushing it. Aaron J, if these results hold, you're going to get a prize at the end of the year. Big if on that. But wow. Everyone else's picks suck, including mine. I picked freaking MSOS, cannabis. That was a dumb thing to do.
I mean, yeah, Valet. A little, I'm not going to say lucky because we didn't know the war was going to happen and energy was going to...
I don't know if Aaron J is watching us right now, but Aaron J, you are you're in pole position by like a mile. So good for you. It is remarkable how congested the rotation is. I just can't get that out of my head. I'm just very surprised that there are, and I see you guys in the chat. I'll pull up the SPY right now. It is just remarkable how, if you're not in energy, commodities, and to some extent defense stocks or even solar, you're not having it. It's a rough year. Yeah, wow. New high of the day right there. Oh, wow. Okay, so we just broke above. This is very important. Okay, we always talk about on pre-market prep the pre-market high and the pre-market low as being very important levels to either hold or break through or support and resistance, right? Well, today's pre-market high, you can see it clear as day in the SPY. 423. We just blew through that. Blew through it.
This is an incredible move. I mean,
this is wicked.
I don't see a specific headline. I do think, we were talking about Chevron earlier. I mean, Chevron's been dumping off everything else. It's like everything that money's been flowing into is now flowing out and back into what's been beaten down.
This is wicked.
But,
wait. How are the Qs? I bet you they're lagging a little bit.
No.
Yeah. Well, no. Wow. Everything.
When the market
is
heats up, it's always growth going fastest.
Yeah. Wow.
Not always.
Oh my gosh.
Also, yeah, Christian Gallagher Asana does report, I believe, tomorrow. And this, I'm interested because I don't know if anyone in public markets history has ever, or any CEO has bought this much stock in a quarter leading up to an earnings report. So for Dustin Moscovitz's sake, they better be good. If they're not good, I
Andy Y,
he'll add some more shares.
Andy Y, this is not new news. That was out there earlier. So,
well, yeah, I read off yesterday, right before we went on the show, the demands that the Kremlin made.
Yeah, it's ridiculous.
The demands were
to NATO. Yeah, if they're gonna let Ukraine in.
Oh, I was talking about the demands to Ukraine.
Oh yeah, they're also ridiculous.
Was saying don't join NATO, Crimea officially part of Russia. I thought they seemed reasonable. I thought if I was Zelensky, I sign it easy. Christian Gallagher, I do still hold some shares of Asana. I'm not in any like options trades right now.
Jesus Murphy.
But I also trimmed my position when it ran all the way up to like 65. Zen Bullish, Sandy Monroe. We did a RAS report with him about 6 months ago. I'll send you the link, or I'll post the link in the chat.
I think it was about a year ago now.
No.
No,
it couldn't have been.
6 months ago was like September, dude. It was last summer.
I didn't move up here until
Dude,
I
that
guess
was 2 years ago
What?
when you moved up here.
What are you talking about? I moved up here. I haven't been here for a year.
What?
I moved up here end of last May.
Whatever.
I'll
Anyway,
find it.
utilities, healthcare, and staples are in the red. Everything else, Rip City, City of Rips, ARK. Look at ARKK. Oh my gosh.
Okay, it was 8 months ago, so I was closer. It was 6 months. And you were 12.
Whatever. Yo, close your eyes and buy. Doesn't matter what. Let's just start buying. Let's just start indiscriminately buying things. This market is, I don't even know how you handle this. I really don't.
Jay Rice is also saying banks are green for the first time in a
Everything
while.
is green except for utilities,
Ooh, look at Blackstone.
staples, and healthcare.
I didn't realize Blackstone got all the way down to 110. This is interesting here. They've got a pretty decent dividend, low PE.
Wait, I don't even know what this means. Is CEI going? Is MULN? What is that, like Mulan? Is that like a different?
Dude, there's so many
a different company?
Mullen Automotive.
I don't know. We have no. Wait, is there some sort of M&A rumor here between the two of them? I have no idea. Wait, I'm sorry. There's a comment that I saw that I wanted to. Yeah, obviously I'm not trying to like get ahead of ourselves here, but I like in terms of just chasing everything. But this is pretty remarkable, guys. I mean, it's this. If you're like an active trader or hedge fund manager or something, I mean, good luck trading this market. Honestly, I don't even know how you. Every day there's 3 or 4 like strong reversals every day. What were we down earlier? We were down more than 1%, right? We weren't quite down 2%. I don't think.
Yeah, I mean, if you're a trader, like quick in and out, it's been a fun market. If you're just a buy and hold investor, it's been stressful. I mean, that's why if you are a buy and hold investor, like what Spencer was talking about yesterday, you don't have to look at it every day.
No, yeah.
I mean, it's I don't think I agree that you should never look at it. I think you should look at it.
Wait,
you don't need to
so I'm reading this book, Psychology of Money, right?
Oh, I'm Spencer. I read books.
Yeah. I read books and sometimes, and there's an amazing stat in there. And I don't have, I don't remember exactly what it was, but he was talking about Warren Buffett and really like the thing that Warren Buffett has, his biggest advantage has just been time, because he's been investing since he was 10 years old and he's 90 right now. So he's been investing for 80 years. But his actual returns over time, while very good, are by no means the best ever. If you look at just his annualized returns. So the author of this book looked at what happens if you take the best investor in terms of returns, which is Jim Simons, right, from Renaissance. If you took Jim Simons, combine his annual returns with Warren Buffett's time horizon, 80 years or whatever, and what do you get? And you basically get a number. It's like 5 quintillion, quadrillion. It was ridiculous. It was like a number that I'd never even heard of before. It's ridiculous. But anyway,
What is in this book, Psychology of Money? Does he talk a lot about Warren Buffett?
No, it's
Okay.
not. It's not about Warren Buffett.
Okay.
It's just
There was another. I was reading an excerpt from a book about Warren Buffett that was talking about his like pinball, machine. Like that's how his first like business venture was putting pinball machines in like barber shops.
Smart guy.
And then going to collect. They would like do the repairs on the machines themselves. Like when he was like 13, and by the end of 2 years, he had like 100 different stores with pinball machines in it. And was going to collect.
Wow. This is remarkable. Thank you, Robert, for bringing this up. Look at this Canopy Growth. Everything is ripping.
Someone, Jim Simon. Someone was telling me to either like watch a movie or listen to a podcast about him.
Yeah. And what about him?
I forget. Someone was
He very famously like doesn't pay attention to like the day-to-day moves of the market. Like he was asked, like this was years ago. he was asked about like because it's all computers, right? It's all algos. Like he built the algos, or his team built the algos, and he was asked to give like a favorite stock or whatever, and the stock that he picked wasn't even trading anymore.
No way.
Yeah, he didn't even know because it's all computers, right?
Yeah.
So
I don't know. Someone recommended me at one point, like, oh, you gotta like watch this YouTube video about it. So if anyone knows what video I'm talking about.
well, there's a book. Speaking of books, there's a book about this called "The Man Who Solved the Markets," which I haven't read yet, but
Okay.
it's about Renaissance.
I just got a library card, so
Hey, library card for Aaron. It is pretty remarkable here. I'm just keeping an eye on things, and everything is ripping. Crappy, non-crappy, doesn't matter.
well, I would say, Spencer, that the caveat to that, to everything is ripping, is look at what's been strong over the past couple weeks. I mean, look at Lockheed Martin, absolutely dumping off. Look at Chevron.
Let's see. Let's pull up. I only have one screen at a time. I got one screen here,
So
I can
while
only do one thing at a time.
SPY, Dow,
Yeah.
everything's going up, Lockheed's going down. Chevron's going down.
And look at solar. We've said solar's been pretty good, not amazing, but pretty good this year, right? Solar's, nice red candle there on tan. So XLE, solar, Lockheed Martin. This is at least good to know. At least we have a very clear relationship that we can trade off of. Remember when COVID was just peaking? You had a very clear relationship. You had stay-at-home stocks, you had reopening stocks, and it was always one or the other, but never both, right?
100%.
This is the same thing.
It's the cyclical nature of the market.
Exactly. So stay-at-home reopening is that's gone now. There's no more relationship there. But we have a very clear relationship now between energy and throw defense in with that, and then everything else. Inversely correlated.
I mean, Spencer, I think this. I might add. I might buy some Apple right now.
It's worth noting that the Apple event is in a half hour.
Oh God,
we will not be streaming that. Because the last time we did, we got in big trouble from YouTube.
Oh yeah, we almost got like shadow banned. I think that I'd be surprised if they announce anything that is.
No, we already know they're going to announce just a 5G enabled iPhone SE, maybe a new iPad, and like it's
What does that mean? A 5G enabled? My phone says that it's 5G, but I don't think I really get 5G.
I don't. So I also have a 5G phone in quotes, but I don't have a 5G plan.
Huh?
Oh, other Aaron is saying they're going to announce new chips.
I thought we already had M2 chips. No, still M1s. What does Rohan have in his computer? M1 Max.
M1. Okay, they're going to announce M2 chips, supposedly, says our IT person / producer. All right. Anyway,
I don't know. I mean, I just think like Apple at 160 is a bargain.
That's what I was trying to say this morning. Apple is not expensive.
Not at all.
Like Dennis is trying to tell me Apple is expensive because it's more expensive today on a valuation basis than it has been really ever. But
what do you mean?
Like its PE is higher today than it has been.
How is that possible?
Well, because their price, even though the price is off its highs.
But I'm saying when Apple was like 180 a share a couple months ago, wouldn't the PE be? I mean, I don't know. I don't think I've ever looked at a chart that shows the PE, but I would just find that hard to believe that the PE is lower or higher now.
I'm going to pull up a chart. So it's Apple's PE is
Blizzy Bone. Apple going to be the first $10 trillion company. I mean, yeah, if we got to bet on
you're right. Apple's PE, it was higher at the end of 2020. So anyway, I'm right though. Apple,
right, I'm saying Dennis was wrong.
Yeah, Apple is not expensive on a relative basis, especially when you stack it up against the overall market or a lot of the other crap, and even not crap. Like I like Shopify. I don't own it, but I would like to. Shopify is still extremely expensive. Apple PE of 25 or something like that, 27. That's freaking borderline value at this point.
And here's what you can argue that Apple's pretty much a value stock at this point. But what I was going to say is, I mean, I think it's important to understand how PE and how price to sales and all these play in. But at the end of the day, Apple having a 30 PE, or even if it was a 40 or 50 PE, that doesn't necessarily make it expensive, right? We've talked about this with Tim Quast that
It's true.
the market is dependent on what someone's willing to pay for a given name. So if someone's willing to buy Apple at 175, if the PE is 45, or if more people are willing to buy Apple at that price than sell it, then it's not expensive. It's by definition not expensive. I think those metrics, PE, price of sales, I think it plays into what price someone is willing to pay for a stock. But at the end of the day, what determines the stock price.
So I understand that. Yes. Okay. So there is multiple expansion. Okay. And that's what happened. That's basically just a fancy phrase for the market ascribing a higher value for something than it used to ascribe to that same thing. So in Apple's case, there's clear multiple expansion. It's priced earnings. If you just look at it historically, it has been steadily rising. It's not at an all-time high, but it's near it, okay? So, but that's okay. Multiple expansion doesn't have to mean that something is automatically overvalued. And maybe Renato can comment on this as well, because I see him backstage. We're about to bring him on here. But multiple expansion doesn't automatically mean overvalued. It could just mean the market deciding that this is suddenly worth more money. And that's okay.
I will say, just real quick, I didn't know. Apple's price of sales is actually above, or it's right at 7. For reference, Amazon's is
7, single digit. Well,
right,
7's high,
but Amazon's is 3. So as far as
seven's high.
Apple is trading at a higher premium than Amazon. But my point mainly was just that if all you're doing is looking at the PE, say that's too expensive for me, you would have missed out on a lot of great stocks, whether it's Amazon, Apple. A lot of these stocks trade at a high PE because people are willing to pay a higher premium for those names.
Yeah.
But all right.
I wonder if Renato has thoughts on all this.
Renato. Guys, Renato has a daily newsletter called The FinTech Focus. If you guys are not subscribed to it, you should, because it has all the top headlines in FinTech.
Yeah. So the first question I want to ask Renato is, Renato, what is your side hustle? Is Benzinga your side hustle, or is trading your side hustle? Which is it?
And Raz isn't here, so
Jason's not watching. Don't
Jason's
worry.
not watching.
I trade full time, and
Okay.
I trade.
So Benzinga is a side hustle. That answers that.
Yeah, the transition kind of happened, I think, after the pandemic sometime. I think it was a few months into. No, it was like the summer of 2020. I don't know.
Renato's trying to train me so I can take off some of the Benzinga duties off his hands, so he can focus more on his real job.
His real job, which is trading. Renato, do you have thoughts on? I mean, do you look at valuation? Do you look at ratios like that, or not really?
Not really.
Okay.
I don't think I'm too qualified to speak on that.
Okay.
I more so look at kind of like the broader picture and, certain metrics out, kind of at the index levels. But not really in terms of like the single stocks and stuff like that.
Yeah. All right. So what have you been trading recently?
Honestly, it's been tough. Last year was a really good year. This year has just been difficult. I mainly trade in the indexes and a lot of the bigger stocks like the Facebook, Apple, Netflix, Tesla, stuff like that.
Yeah.
And it's just been a lot more difficult. My range is like 3 to 5 days where I'll hold positions, and then when you get this volatile, you have to kind of shorten your duration and kind of focus on more of like the intraday, right? And that's been quite a shift. It hasn't been too difficult, but it's just it's not really where I like to focus. I like to focus more on that kind of like swing. That's where I try to find specific levels in the market, and I try to structure some sort of spreads where I can try to play for some sort of expansion towards those levels or against, stuff like that.
You want to share your charts for us and walk us through any recent trades you had? I would be curious to see how you've approached this, because as we were just saying, I mean, we've reversed hard in the last half hour here, and I would imagine if you're someone trading intraday, it's very difficult. I of course am not. But.
What can you see? Okay, I see.
I see everything. Wait, take that off. Is your account number up there? I don't want you. No, is it?
No, I think I've blocked everything out.
All right,
cool. All right, so I've got a couple thoughts in terms of kind of like the broader market. I mean, if you kind of look at why are we trading weak, right? Well, if you look at the single stocks, I mean, they've been coming down for over a year. Like if you look at like ARK and some of the things in ARK, right, that's been kind of like falling since, you know, last February, right, or something like that, right? And so we've kind of had like this D rate in the single stocks for, you know, quite some time, whereas the indexes are still kind of at their highs, right, as well as some of the bigger constituents, right? And so there's kind of a divergence right there, and the question is whether or not that will ever close. There's certain factors that are probably leading to that, and whether that, I'm certainly not the smartest person in the world when it comes to everything, but there's some of the options market aspects that play into why that is, and so on, right? But when I'm kind of like zooming out and I'm trying to develop like a trade idea or a thesis or whatever, I'm looking at like, okay, what are the odds that something is going to happen, right? So like I said, I focus mainly on, like the indexes and the bigger stocks, and I look at, key levels and things like that, and then I try to take notice of certain events that might be going on. So like next week we have a monthly options expiration. Into that,
It's true. It's true.
Yeah,
And
into that, usually the you're pretty weak heading into those. That wasn't always the case, but there's certain reasons why that is, whether that be front running and stuff like that, those post OPEX flows and stuff like that. But having that in mind, I'm kind of looking at a lot of other things, like look at where the VIX is at, right? And the VIX you can kind of look at as, or think of it as like the equity market's pricing of risk, right? Whereas if you look at, in other markets, like, do you know Move? That's kind of for the bond market, right? Right. Whereas, the pricing of risk in some of these other markets is, divergent. Like, you look at Europe, right? And so my idea is like you have cross asset volatility going insane. You have some of the other markets abroad, right, that are trading relatively weak. I know that historically, some of these OPEXs, right, you tend to have some weakness heading into that, right? So with that in mind, I start heading to the charts and I'm like, okay, what are some key levels that I can look at and start maybe structuring a trade, right? We've been trading weak. This is something that I had in the morning, and I was kind of looking at, I'm like, okay, we have this balance area where we just kind of consolidated for a week or so. We tried to break out of the balance up here, but we failed. So we rotated to the other end of balance, and then we finally broke through. And then this was a key target, like this VPOC right here. It's just some untested value. I like to, look at the profile and stuff like that. And then we have this overnight low. I think we take the overnight low eventually, and these rips are to be sold. Like I use a lot of volume weighted average prices, and I anchor them at certain points in time. And so the idea is that there's liquidity algorithms that are kind of at those levels, and that'll act, right? I mean, there's a lot of times where I think PQQ is a good example, but you can see where a lot of times it'll come right into those levels and you'll bounce, right? And the idea is that is like the average price over that time frame where participants have bought and sold, right? And so there's probably going to be some sort of response there. So I'm looking at those key levels and I'm immediately thinking, okay, what can I start structuring, right? So on like let's say in the S&P, I'm kind of looking down and I'm like, okay, where can we go, right? So if I go into the SPY, right, so I'm immediately thinking, I'm like, okay, we have some of these key levels down here, and I'm like, okay, I feel like we might have a little bit of weakness. You see this insane volatility in other markets. If that were to come down there, right, what can I structure? Maybe that's low cost. Well, right now there's a lot of skew, right? And so you can potentially structure things where you're buying options in front, you're selling options further away, and the options that you're selling further away, you can collect a lot more premium in them, as opposed to in normal times when there's not quite a bit of volatility, right? And so things you can do is maybe structure butterflies and stuff like that, where you're maybe buying the closer strike, you're selling more further down, and then you're capping your risk maybe further down. Ratio spreads is another one, but that's carries a little bit more risk. And were we to kind of explode lower, there's you run the risk of the options that you're short and you're short more of potentially go exponential, right, and go against you, right? So there's kind of a balance, right? You need to kind of have your time frames right, as well as kind of the widths right. But that's kind of how I'm thinking. Does that kind of make sense to start?
Yeah, I mean to some extent, but can you be a little bit more
Yeah,
more practical with it? I mean, can you walk us through something that you've done?
sure. Things. Okay, so I'll give you a trade that isn't working right now. Right up here. So I told you we broke out of this balance area right here, right? And so my idea was like we were pegged on this level, right? So what happened is I see, where's the potential we could go, probably go towards the 4,500 or whatever. What I had was ratio spreads and butterfly structured above these prices, right? Where I did pay out a little bit of a debit, right? But the idea was to put that on for as low cost as possible. And it's almost like a lottery ticket because, if we do move higher into those strikes, you can play that expansion. Obviously, that didn't quite work, and so I believe I'm still sitting. I started closing out the ratios because there was no point in having that margin out there for no reason or whatever. But I was structured all the way up here, and so the idea is, you can put these on for really low cost, and then take it off for 200, 300, 400%, right? And play the expansion that way. That's one thing that's not working. A couple other things I'm looking at are Tesla. I was looking at Tesla in certain levels. Maybe I could play in Tesla. So if Tesla was to go up, where could it go? So right here. So I'm looking at like these key levels, right? And I'm like, okay, what could I structure against those levels, right? So maybe a butterfly right up here. Something I did for a while we were, trading week was I was doing a lot of trading in some of the bigger stocks like Booking. And what I was doing was ratio spreads where I would sell. I would buy a put that's closer to the money. I'd sell more further out, and I'd collect a couple dollars in credit, right? So if I look back,
Do you find yourself like using spreads in certain situations and not others? And if so,
yeah,
when are those situations?
yeah. So you have to be careful, right? So right now, I'm very much kind of reducing the amount of risk. What I like to do is I like to do things kind of unbounded, right? Where I'm not paying for that extra protected call or put that's way far in the money, right? So that means I have an extra short option, right? But there's a long option kind of in front of it. And the whole thing is if volatility blows out, that's something that can hurt you really badly, right? So in times such as this, where let's say I want to express a bullish thesis right now on the indexes or whatever, like right over here, I was doing right in here, but I was too early again, right? I was basically, instead of doing ratio spreads, I opted to do things like at the money call credits or not call, put credit spreads, and I use that to kind of finance out of the money call debit spreads, right? But obviously there's a lot more debit risk there, and so you have to be a little bit more right on direction, as opposed to if I did something like a ratio spread on the call side, right? You're not as worried, more so as long as you have kind of your timing right. You're not as worried about you getting that move immediately, right? Because you kind of want the options that you're short, you want to give them time to kind of drain out, while the option that you're closer, that you're long, that's closer to the money, is holding value a little bit more. And so when you finally do get the move, then you get that expansion or whatever. But that's kind of what I've been playing. I've been trying to play the edges more so. I've on an average day last year, maybe I was putting up to 10 trades, right? And putting things on, taking them off. Now it's declined. It's a different market environment. I'm over to 1 to 2, right? And I'm just trying to stay safe, right? And and not kind of blow up. Right?
So you're reducing your number of trades, you're reducing your time horizon, and you're reducing your size, right?
Yeah. So I try to kind of hone in and focus on things that or stocks where I kind of have a feel for how things trade and where I know my key levels, right? There's a lot of stocks out there, but I just don't have time to kind of look at all of them, right? So I try to know the ones that I'm focusing on, so like Tesla, Amazon, here's like one thing I'm looking at in Amazon, right? Amazon, I would actually be interested in owning stock, right? But kind of at lower prices. So let me show you. Right down here. So I have a key level right down here at like 2483, 2500, let's say, right? When we come to that level, I have no guarantee that we're just going to turn right there. I mean, it could just come down there, chop for a while. But how can I do something where I can kind of sleep better at night, where I kind of give myself a little bit of a buffer? I was actually talking to Jason yesterday about this. But basically, you buy stock, right? And then you can structure one of these spreads on there, like a ratio spread. So here's just the ratio spread without the stock, and I added a short call, so you can kind of you can forget about this section. But this is like the ratio spread. And so the idea is you're long here, you're short here, twice, and so if you move towards it, you have potential to make money. But what you can do is you can use that to hedge a stock position, right? So if you just bought stock right now, your profile is linear, right? Obviously the stock has moved, and but this was earlier when I was pricing this out. But as you go down, you're like losing 1 for 1. Whereas if you apply something like this, all of a sudden you can give yourself like $150 buffer down here, right? And so when you're looking at something like Amazon, right? Imagine having yourself like $150 buffer here for like maybe 1 to 2 weeks. Let the shakeout happen or whatever, and then you can potentially participate in a little bit of an upside, right? Because it's, let's see right here, you still have a positive delta exposure, right?
Renato, how long have you been trading? Out of curiosity, 4 years, 5 years?
This has been about 5+ years. I started just by trying to kind of learn myself, but as you know, I mean, it's difficult. You don't know what's out there. You don't really.
You don't know what you don't know.
Yeah, you don't know what you know, and then through time, I met people. I got a little bit of mentorship here and there, and saved enough money. I think capital is another thing people really don't talk too much about. You need capital to do this, especially full time, right? You can't just. It's difficult to just come in with $1,000 and try to kind of blow that up thousands of percent, right? If you come in with maybe a sizable amount of capital, 25,000, 50,000 or whatever, and you try to generate 100% returns, like that's more realistic, and that's more.
What's the easiest way to make a quick 25,000 to start investing?
Yeah, Renato.
For me, I just saved money. I worked in high school. I worked in college.
Made coffee at home.
You did not buy avocado toast, I think is the answer.
I did not. I don't go anywhere pretty much. I basically I have like 3 jobs. I do the trading full time. I do the Benzinga work, and I also work with a guy that does a lot of options modeling, where he'll take like data in the options market. He'll make certain assumptions or whatever. How the customer is positioned and how the counterparty is going to react to that positioning. Like let's say in the indexes, the dominant position is, the customer is trying to hedge underlying equity exposure. So what they're going to do is they're going to buy put protection, right? But to lower the cost of that put protection, they're going to sell calls, right? And so the dealer on the other side of that has a positive delta trade, because if you're short,
so they have to hedge them, right?
And you have to hedge that, right? But there's actually the hedging of that when things are normal, like when we're not in such environments as this, that can actually bolster sprints higher, right? Which is kind of what we saw through 2020 and through 2021. That's not the case anymore, right? And so a lot of that hedging right now is pressuring the markets, right? Where if you have a lot of customers reaching for put protection, they're buying that. and the counterparty on the other side of that is short that, the only way to hedge that really is by selling the underlying futures or stock.
Right.
And that is where you can get that added pressure. And so the idea is with this coming up monthly options expiration or whatever, the idea is you're going to have a lot of that risk removed, and you're not going to have the pressure from those hedges anymore, right? So there's going to be a covering of those hedges, and that might be able to bolster. That might open like a window where the market can kind of succumb to fundamental positive developments or whatever that means. Like,
All right, Renato Capelj is a part-time Benzinga employee and a full-time trader, and he will join us periodically on the show. And he's way too smart for Aaron and I, but that's okay. We tolerate him anyway. Renato, always a pleasure, man. Stay safe.
I appreciate you guys bringing me on. Thank you so much.
All right. I'm going to pull up a page, Aaron, that I've been to probably like once or twice in my life. We're going to have to start making this
It's safe for work, right?
Yes. I'm going to have to bookmark this page is what I'm saying. I'm going to have to bookmark this page and start checking it every day. Okay. Do you know what this is?
Gas Buddy.
Well, sort of. It's AAA. It's AAA.
Okay, so the national average right now is above $4.
Yes.
Okay.
Yep. $4 and a little over 17 cents. Right. Gonna have to start bookmarking this page. Gonna have to start going here every day, and just to get a gauge. First off, what's up with Michigan, man? What's the point of being in the Midwest if you don't get the perks of lower prices like everyone else in the Midwest?
We have the most perks anywhere in the country.
I mean, the coastal elites are the ones that are paying the most here, but we're in the. Shouldn't we be in the blue? Is what I'm thinking.
Well, look at Illinois.
Well, that's because of Chicago.
Right.
So.
Yeah, and I don't know. I mean, I guess Spencer, again, we both read some kind of conflicting research. I read an article which I'll find and pull up talking about how even if we get back to all-time high gas prices, we looked at the chart yesterday, I believe in 08 when it was $4.30
well, here
a gallon.
the highest recorded average price, and this is adjusted for inflation.
Okay.
That's what this is. So for today is an all-time high.
How is it adjusted for inflation? How does that?
So what I think they're doing, it's not like an absolute basis. I don't think. I'm assuming this is real. Like this is inflation adjusted. I guess I could be wrong though. I could be wrong. I just assumed it was.
I just if everything. All right, so here I'm pulling up. Yeah, so in June 2008, we were also at a little bit over $4 a gallon.
Right. I don't know if it was 4.17, but I'm saying
no, it's 4.11. So it is higher now. But basically, what I was reading was
for 4.11
for relative,
yeah,
like
okay.
the way wages have increased, how much money is out there that it's not. For the average American,
4.11 in 08 is higher than 4.17 today.
Correct.
Right. Okay. So maybe not adjusted for inflation.
It's basically saying that it's still right now less than at that time. What would be that the portion of your expendable income coming out for gas?
Man,
was the point that this person was making. They basically said U.S. average prices would have to get to like $5 for it to be the same amount of pain of that was in 08. I mean, but think about it. I mean, we're definitely in a correction here, bear market, whatever you want to call it, but I don't think we throw the R word out there, recession. In 08, we definitely were in a recession, and gas prices were over $4 a gallon. I mean, that was...
Dude, 08 sucked.
Yeah, I mean...
2008, it was so bad. Like, I remember... Was it that? Oh, no, it was the following summer. It was 2009. It was the summer between when I was in high school and college. And I could not find a summer job in the summer of 2009.
Like scooping ice cream?
Like, yeah, couldn't do it.
Really?
There was nobody hiring. It was 08, 2009, man. That sucked. It just sucked for a lot of people.
Yeah. I don't know. I was in those like awkward years of life. Probably wasn't great for me either.
Anyway, this is the AAA national average gas page. We're gonna have to bookmark this and bring this up now every day and see just how high can we go. Not great for who owns like Jeep? Is that and
Chrysler
and Hummer? Well, Hummer owns Hummer, right? I think.
That's a good question. Well, I don't think Hummer produces gas vehicles anymore. I think they're only producing the electric Hummer.
Oh, all right.
I could be wrong.
Not great.
But also, what I find interesting is, I mean, we hit like over 130 a barrel on oil, like crude oil prices.
Yeah.
It looks like it's kind of one of those sell the new, like we banned Russian imports. That was kind of expected to happen, or at least somewhat priced in. EU announced it was planning on cutting its imports from Russia. Obviously, it doesn't have the capacity that we do. The EU does not to fully stop its imports from Russia. But I mean, I don't know if there's a reason for oil trading down in the last. I mean, look at the. I guess I can share my screen because we don't have the actual crude oil in Benzinga Pro, correct?
Yeah, we don't have futures.
So this is the. I don't even know. Is it future? It says just WTI, but this is on daily FX.
What do you? Yeah, that's futures.
These are futures. I mean, look, these are
Yeah.
30-minute candles. Look at the last hour.
Wait, what the heck is that? You're looking at CFDs? What the hell? No, that's futures. That's 122. That's right.
U.S. oil.
Yeah, all right.
Symbol search. But yeah, basically my point was, look at these like two big red candles. The past two. These are 30-minute candles. This past hour.
Yeah. Wait, did someone just say wheat went limit down? No, can you pull up wheat up there
on daily FX?
Since you're holy crap. After limit up yesterday, limit down today, dude. How do you even
wheat?
How do you even trade this stuff? I've never traded futures before. No, here, forget it. I'll just do.
I don't know how to use this.
Here, let's just.
This isn't Benzinga.
Let's just do the ETF. I know it may not be right. I'll bring in the ETF. I know it's not right. The ETF is going to be not necessarily this correlated to the price of wheat, but wow, holy crap. Holy, that's unbelievable. So wheat's still going to trade, but the reason it's not necessarily going to be moving in a lockstep with the actual commodity. Well, first off, as we just said, wheat is lock limit down, so wheat's done for the day. But also the wheat ETF. And actually, we're going to have, this is a good plug for tomorrow's show. We're going to have the CEO of Teucrium. Is it tomorrow's show? Or is it? No, it might be Thursday. It might be Thursday's show.
All right,
It's Thursday's show. We're going to have Sal Ghiberti. He's the CEO of Teucrium. That's the firm behind the wheat ETF and others. They have wheat. They have corn, they have soybeans, and that's going to be on Thursday's show. So we're going to talk to Sal about what the heck is going on from his point of view in terms of having products that offer access to commodities and what happens when you have to do things like Teucrium did yesterday, where they halted creations. They're no longer creating new shares of the wheat ETF. It just creates some crazy shit, basically. And so we're going to talk to Sal about that on Thursday. But I'm trying to keep an eye on the chat. I'm trying to keep an eye on my watch list. I do want to look at crypto before we bring on Christian Fromhertz here. I had my heat map pulled up. Can you play me my little bumper while I
let's
get
do
my crypto heat map up here?
Crypto.
Oh, that was weird. Did you end that?
I might have accidentally clicked it.
That's surprising. Anyway, I got to admit, Christian Gallagher, I'm agreeing with you. I saw your comments from earlier in the chat. I also am struggling to come to terms with why Bitcoin really has not been a better performer of late. I really thought that it would thrive. And I understand that we are in a broadly speaking, we are in a risk-off environment. Bitcoin is a risk-on asset. It's a growth asset. But in light of what's happening over in Russia, I really would have thought that. And frankly, it's a lot of global currencies. I mean, basically everything except the dollar, US dollar, right?
Well, here's why, and I know we've talked a lot about kind of the correlation between Bitcoin and the markets, and which is pushing which. Is it correlation or causation? bottom line is we've seen now the fallout of two huge global events.
Yeah.
Right. Pandemic to the war that theoretically should be very bullish for Bitcoin. You know what would be a bullish catalyst for Bitcoin?
No, I don't know what you're gonna say.
Is if Powell or the Fed comes out and says, "Oh yeah, we're not going to raise rates for another 2." The Bitcoin would be up 5-10%.
Well, they're not gonna say that.
Well, I know they're not, but I'm saying Bitcoin would be up if they were pushing interest rates.
Also, there was no news out. I know there's supposed to be some announcement from the White House about some Bitcoin regulation, but I'm just confirming that I didn't miss it. Right? I didn't see anything yet. I want to make sure because a lot of times when we're on this show, I only have my one screen in front of me right now, so I can miss news during the course of this show because I'm talking to you and only looking at one screen at a time. So if there was news, I missed it. But there was supposed to be a headline today out of the White House about some crypto regulation, whatever that means. This is a hard circle to square, a hard square to circle, really. The underperformance in Bitcoin in the last few months. It's been very disappointing. And I own Bitcoin. Aaron owns Bitcoin. I also own Ethereum. I own Solana.
I actually don't own any Bitcoin right now.
You don't own Bitcoin?
No.
I thought you did.
I did. I sold it.
When?
Maybe a week ago.
He didn't tell us. Sneaky. He's sneaky. The Aaron. He sneaks around. He's very, very sneaky. You said maybe a week ago, as if that wasn't the high right there.
I don't know. Let me see. What was the other thing you said? My timing was impeccable.
44,000. Ridiculous.
Whatever it was.
Very, very sneaky.
I sold March 2nd, so a week from tomorrow at 43.
He's literally sold 43 what though?
40.
I gotta know
43, 484.
And the high was 44, 44.40.
Yeah, so I was about 500
Oh my
bucks off.
gosh, ridiculous. You should buy it back now, man.
I should.
You should buy it back now.
I have a recurring investment set up for Ethereum on my Robinhood, where just $10 every single week goes into Ethereum. And I think I'm that's sufficient for my crypto investment.
Dude, but technically speaking, this Bitcoin chart does not look that bad, right? You just trade that range.
Right.
Hey, if you want free Bitcoin, it's very easy to get. All you have to do is download the Voyager app, create an account, use the offer code that's on the screen, ZING. That's your sign up code. Fund your account with $100, make a trade, any trade, and they will send you $50 worth of Bitcoin. And you maybe want to do that now before we top out again at 44,000. Just a guess, not investment advice. Let's bring on Chris from Fromhertz, at CFromhertz on Twitter, Tribeca Trade Group. He's going to join us today, but only audio, no video for Christian today. I'm going to bring him on right now. Christian, what's up, man?
What's going on, guys?
The market roughed you up enough to the point where you don't want to, you can't, the hair is too messy? Is that it?
That's exactly it. Days like that. It's another quiet day in the markets, right? I mean,
it's so quiet. It's so
nothing
quiet.
going on at all. Yawn, nothing going on. Yes, days like this, my hair just gets out of control. No, I'm on my laptop today, and otherwise, the more systems I use, the worse it gets.
Very, very difficult to do things on your laptop. I'm on my laptop right now, and it's incredibly difficult to keep up with stuff.
The multitasking on less, and I actually have a couple. I have a couple laptops working. That's the best way I do it from home, is to have a couple different machines. This way you can kind of juggle the applications. But just as you were mentioning, you really have to multitask as you're as you're live. You've got limited real estate. You need more screens. You need more screens.
I know. Producer Rohan, can I get some more screens up here, please?
Especially right now, what's going on in the market. You need to be watching wheat. You need to be watching, any type of commodity now.
Nickel,
so,
copper.
We didn't even talk about nickel yet today.
I know, and copper hit all-time highs too.
Oh my gosh, what even, Christian? So
there's a lot of Google searches right now for Nickelback. No one knows what's going on. It's crazy, But
is Nickelback back?
They're getting attention from the move in nickel. Absolutely, sure.
I asked Aaron Thomas if he'd go see a Nickelback concert with me. He said no.
But seriously, I mean, I think, over the last couple of weeks, there hasn't been that kind of focus, right, on commodities. So you do need to be kind of having a separate screen out to see what what some of these moves are. Clearly, you can't play all of them with the way that the volatility that's going on in these.
Do you Christian, play commodities typically?
Oh, absolutely. I mean, that's what I've been kind of concentrating more the last couple of weeks, because just the equity momentum is just not there. But I'll move to whatever is moving. So if what we've been seeing the last couple of weeks, and I had thought going into the year, and I can share my screen, I can do that, right?
Correct.
Yeah.
Okay, let me do that. But I had thought going into this year that that gold was going to be a nice play, and that's kind of turning out pretty well. Although today I am a seller into the strength, and that's the other thing to kind of realize, right? I mean, when you see some of these moves, like gold doesn't normally move 3% a day, so it was up 3%, and I have one account that's more for like medium-term, long-term swing trading, and I've put on a couple gold positions there, both in the gold miners and in GLD itself, and that I kind of leave on. But then I'm also like, I have more of like a tactical account where I've been long. I got long the junior gold miners on Friday, and like I took the trades off today in that, because just like anything in this market right now, just being super greedy hasn't really worked. So when I see these things flying as much as they did, and it's important to kind of plan out your trades. Silver Wheaton or Wheaton Precious Metals is another one too, where I got my upside target, and it's tough to say as fast as these things are moving to be like, hey, I'm going to sell into this strength, but this is now only up basically less than 1% at this point. So it just kind of goes to show you, here's my upside target. But you have to be, in my opinion, you have to be a seller into some of this strength, because like, as we're seeing, there was just a headline, about a half hour ago about, whether or not Ukraine is like, wants to make some kind of, I don't want to say concession. I don't want to say the wrong thing, but now they're talking, there was just a headline with an ABC news story out overnight talking about how they may not want to be, they're okay with not going into NATO, and again, this is, you don't know how much to kind of take that story and run with it, but automatically you see energy stocks go down, and you see the precious metals go down. So you cannot be complacent in this market, and you cannot not take targets. I always try to leave like the last portion of the trade on for a runner, but it really depends on how you've planned out your trade from the beginning. And if you're looking to get into some of these things, and I get it, there's FOMO in some of these things that have just run like crazy in the commodity area of the market, but try to plan out your trade. Like, instead of just like, oh geez, I missed it and I got to get in it, like, think about, okay, if you're going to chase some of these things up this much, where's your exit point? Because it's got to be something, oh, I got to buy it, because of FOMO, right? It's got to be something other than that. So it's very important.
Something to also think about is there can oftentimes be there's a difference between what the macro picture is and the market's performance. So a lot of times, like, the market will get ahead, like, we'll get over enthusiastic, and we'll get ahead of the macro picture. Where, and even if the macro picture, even if nothing has changed, even if there is still a massive global shortage of oil, and Russian oil is off the table, even if that remains the case, as as we're seeing here in the last few minutes, oil can certainly rip down in your face.
Oh yeah, I mean, there's so much in terms of the expectations of what they, and there's so much of the old type of trade, which is, buy the rumor, sell the news, right? And I think there was so much already built into that there was a very high probability that we were going to stop. And same thing with the UK, which announced today that they're going to be scaling out of buying oil in Russia. But I mean, how much of that was already priced in? And again, it just goes back to whatever the story is or whatever the situation is, right? It's a lot of it is buy the rumor and sell the news, right? So, the taking the profits into, when you've got names that are up 5 or 10%, if you're not putting some of that money in your pocket when you get a move like that,
I know.
especially on something that you may not be, a month ago or a couple of weeks ago, you may have never traded in NOV or an Oxy or any of these 20 or 30 names in energy, or the 20 or 30 names that you may be looking at now in commodities. So, you can't get to be an expert in all of these names that are moving like this just in like the last, week or 2 weeks. So yeah, taking profits, in my opinion, really helps. And it's nice to be able to catch some of the moves. No way that you can, that's the other thing that you have to think about too, I think, in terms of strategy in this market, is you're not going to catch every one of these moves, right? There's just no way that you're going to be able to have 10 commodity plays on. And, and then if there's a headline that happens in the market where all of a sudden, like we just got an hour ago, and things are going to flip around like that. So you really have to kind of think about strategy, planning out your trade, what you're expecting, and then moving from there. I mean, I thought, for the last couple of days, I was looking at the solar group and saying, okay, at some point these stocks have been in the doghouse, right? All the clean energy names. But at some point, the higher the price of that crude goes, you've got to start pulling up some of these names, even though the market doesn't like or hasn't liked the more expensive names, because they're a lot more in terms of valuation. Most of these names are a lot more expensive than the energy, than the old school energy names. But now they're finally catching, and there was a nice little move back in here, check back, over the last couple of days, and I'm liking what's going on in this group right now today.
And I mentioned before Christian came on that I sometimes miss news on this show. I did just see that McDonald's has temporarily ceased operations in Russia. I know they were getting a lot of heat for that decision. So,
Thomas Friedman saying,
who?
Thomas Friedman, author. He's the guy that said that two countries that have a McDonald's will never go to war with each other.
Oh, great!
He's kind of vindicated now, right?
Nice
He'll say, they don't have Big Macs anymore.
This is not. Yeah, man, this is not good. This is an escalation. We need de-escalation.
Yeah,
anyway,
it sounds like the last companies, that there was a bunch of companies right away that said that they weren't going to do.
I know, but a lot of hotels have remained operating, and I'm not here to point out whether it's right or wrong. It's just an observation. I think a lot of the hotels are still have operations in Russia. Saw a tweet this morning go by about it was like a list of companies that are still doing that. By the way, the Apple event I think has started, just as an FYI. Again, probably not going to be the biggest thing in the world, but watching Apple right now as they unveil, Apple continuing to go with the rest of the market. Frankly, it's very what a remarkable move today, Christian. And really, I'm not even sure what I watched the Biden press conference.
Yep.
And I'm sure you did too. And I am not even sure why we're doing this move here. Do you understand it?
What I do understand, I mean, on most days I'm not understanding everything that's going on, but I think you try to pull a little bit of information. I mean, I think coming into today, and it's very difficult to pick the exact day that it's going to happen, but you kind of just felt like, hey, sentiment is getting a bit washed out. And I think for the action that we're seeing right now with IWM, which is up 2.8% for the day, I think right now you just kind of have to take it as there's going to be these oversold moves right now. And I think that we were due for this. And I even said it in my pre-market session yesterday morning. I said, hey, at some point, I think that we're going to get another one of these pretty decent squeezes that goes on where you get this big oversold move. And for a day, maybe a day and a half, things just rip to the upside without any major news. It's just the fact that things have gotten so washed out. Right. And I hate to call it a bear market rally, but there's going to be some areas of the market that are in bear markets, right? Not every area of the market. Certainly the commodities are in bull market right now, but there's going to be some areas of the market that are going to have these rip your face off type bear market rallies. I just bought some Datadog, right? I mean, this is as a day trade, right? And the chart does not look good. I'm not holding this, right? And it doesn't really matter so much what the chart looks like for a day trade. But on something like this, where I've just seen it go down like 4 days in a row, it's a name that had pretty good earnings. It's unloved right now, but I saw some calls go across the tape, and I'm like, okay, this is perfect, because we're seeing all of a sudden, like over the last hour, we're seeing a lot of reversion type trades. So I'll just be in this one, to the end of the day. And, that's how you have to think about this market right now in terms of the beaten up areas of the market. And I don't have like a particular, I like to be more like a catalyst type trade for this, for when you see these reversions. Like I'm also looking at Marriott, but the problem is the market has moved so fast. If you don't, click the mouse very quickly, this thing's already, this name, because all the travel stocks are ripping now on this headline. So this is up at 7%. So you got to be really quick. And
are these
I don't even know what headline we're talking about.
These daily candles, Christian?
Yeah, these are daily.
What headline are we talking about?
I think just the tone, just the last headline about that. I'm not sure if I would call it a concession, but Ukraine coming out and saying like, hey, well, we don't necessarily have to be in NATO,
which was one of also Russia's demands for supposedly ending the war.
You got to connect the dots here a little bit. So
it sounds like they're working right. Russia proposes these conditions to end the war, and then Ukraine the next day says, "Yeah, we're fine with pretty much the main thing in there." It sounds like it's talks toward de-escalation. I'm not saying everything, everything's rainbows and butterflies, but I'm hopefully optimistic.
Oh, but for a day trade, and that's how you, and I think really that's how you have to look at it, is like, oh geez, look at how bad the airlines have gotten crushed.
Oh my gosh, brutal.
And look at,
it's been brutal.
It's been brutal. So look at United. Like, so all of a sudden you start to see, and watching the option flow helps a little bit, because you could kind of say, okay, what are they doing buying, United Airlines calls? Well, the momentum in this market is just unbelievable right now. I mean, this is now up 9%. So that's how fast things are moving. And, that's how oversold. I mean, this United Airlines went from $43 to $30, right? And I get it. There's reasons why it's done that. The price of jet fuel is crazy expensive. People are not going to be able, there's going to be some decrease in consumer spending. So you guys were talking about this morning about, hey, what happened to Macy's and what happened to this stock? Well, all of a sudden it's a knee-jerk reaction that once you've got that move up in crude, all of a sudden, like, oh, does that mean like no one's going to be spending, or is it going to be a decent haircut in terms of consumer discretionary spending?
Christian, I wonder if you think that the more volatile the moves that we get, the later in this phase we are, like the closer we are to the end. And I don't mean to the end of like this war in Ukraine. I mean like the end of this phase of the market. Like the wilder the moves we get, the closer we get to us entering a new phase, whatever that phase may be.
That's a great question, and to tell you the truth, I'm watching. I'm glued to the monitors every day, watching for things, and just a couple hours ago, what was I can't see it on my screen here, but I think the VIX was 37.5, and we're down to 33. So we're moving very quickly, and every day it's basically looking for, okay, what level of, how extreme has this gotten? And, so it's a little bit of saying, okay, these things are really getting, the moves are getting bigger and bigger, but I got to see some type of confirmation that something is basically coming in, like the VIX. Like I would like to see the VIX start to get below 30. Right. And I don't know if we're going to get there yet. And if we kind of stay above 30, then it should tell you that, like, hey, we're not out of the woods yet. Right. And looking for some of these things, even like what's been troubling me, too, is like the put call ratio has not gotten extreme. Now, does it need to get extreme, or is it just, the level of selling that we think is extreme? So these are the things that I try to kind of like put together every day and figure out. And it kind of tells me as well the overall level of exposure that I want to have in this market. And also, instead of fighting with this market, because I'm normally a swing trader, and I've come on your show now a few times, and I talk about how, you know, I'm that's my game is swing trading. But right now I've got the day trader's hat on, right? Because that's where the money's to be made. And with the VIX staying above 30, you just cannot have, like, at least for me, cannot have a lot of positions on. The phrase that I was talking about earlier is like, with the VIX over 30, more positions on is more problems, because this market is just moving too fast on headlines.
Christian, in a normal environment, how much cash do you have in your portfolio, and how much cash do you have now?
Normal, like I always, like I'm never really fully invested in my trading account. I always have, I'll usually, when I'm like happy with the way the market is going and moving, and I'm seeing a lot of things, it's usually I'll be like about 75-80% invested. I always like to have some dry powder available, but right now, like I'm like 75-80% cash right now. And you know, I've tried to kind of get into, you know, what's been working for me is more of those commodity plays, you know, of course. And every time I try to like dip my toe into another area of the market, you know, just to be like, hey, well, maybe this is going to turn, or maybe that's going to turn. It's been very difficult. Like I tried a trade, and this is what we're seeing. Like, this is a good example, by the way, for just to show you like why like an ON semiconductor is something right now, like I have my eye on. But wait for my screen to adjust here for just a second. But we're just seeing in the growth area, there's so many just false breakouts, or names that are just getting close to where they're going to be, and then they stall. Like I was looking at this last week, looking for it to break like right around 63.50, couldn't do it. And then you got to be quick. And if it fails, you know, this is what has happened. So now it's kind of doing, rather than breaking out, we're basically trying to break in, you know, back into his own. But, you know, this growth space is just very difficult. And, you know, that's why I mentioned I'm in Datadog just for the day, because it's, you know, other than seeing a couple days of green, we're just not getting enough follow through to be swing trading this group right now.
Man, it's just so much out there. If anyone has any questions for for Christian, any tickers you want to drop in the chat, do that now, please.
Yeah.
Or not.
Some charts.
And we can start ripping through some charts and seeing what Christian, seeing his take on things. And I mean, I'm just looking ahead. There, you know, we have some earnings tonight, tomorrow. We got the Fed next week. We have CPI number on Thursday, which is going to be very important.
Yes.
Let's see what else. Interesting.
So I have Regeneron up here while I'm waiting for you guys to go through some of your charts. This is one that I tried trading real quickly yesterday. Noticed that the candle was pretty nasty yesterday. I was calling it disgusting, but it did not close, like, you know, for my signal, which would be like for a move above 628. But it's trying again today, and I like I feel like there's something going on here, or there's something that could be happening, because the price action is so tight right now in Regeneron. So, you know, this is where I do a lot of monitoring, you know, being that the energy names, though, the commodity names have worked really well, the food names, but it's going to be like, well, what's the next thing that's going to possibly start to move? So while those areas of the market have been really well, doing very well, I'm doing a lot of monitoring of a lot of other areas of the market. Again, not so much investing or getting in, you know, having to take a position in, but I'm really doing a lot of like monitoring of, okay, if we start to see some type of a shift, or if there's the right headline, right, then, you know, another group of stocks could get going. So that's where you really want to be prepared.
All right, couple of tickers here coming from the chat, and no surprise, they're all commodity based. All right, WPM, wheat and precious metals. Isn't that what that is?
Yes.
Yeah.
The one I just talked about that one.
All right,
I took this one today. I took my profits for now and ran. And as soon as, I don't know why I'm having a tough time here with the charts are being slow. But again, that's the old laptop being on a laptop. But I did take my target in this one today, which was basically right at 49.20. So I'm out of this. If you're looking at this now, right, I would want to see it close above that 49.20 level, and then you can concentrate on moving. The next upside target I see on my chart is 52.60, which is a virgin point of control, which is another area of high volume that price has not revisited. So the trend looks pretty good here. And I think just if I could just, add my little strategy into this group, right? Notice that what you're going to see in a lot of these charts typically, now I know that there's a lot of momentum right now in these groups, but what you want to see is probably a little bit of digestion. That's going to take place. And then you could possibly look for that next move, which I think will be up to 52. But, we could go through as many of these commodity charts, but it's funny. Like a couple weeks ago, I was talking about these groups and I was getting crickets, right? And, I would put out a chart of gold and say, hey, this is really interesting. And I'd get like 5 likes. I'm like, I don't understand. Like the chart setup looks so good here. And now everybody's asking me about
what can I say?
Yeah.
We all have shiny object syndrome.
Yeah,
Christian Fromhertz from Tribeca Trade Group. Let's do like 1 or 2 more.
Yeah,
wait. What is PLG? I don't know that one. Platinum. Okay, that's platinum. Well, same thing.
Which one?
PLG. Easy Mike's is interesting, and then
Platinum Group Metals. I don't know this name. This is a penny stock. So you could see it's down 3.5% for the day. It also hit one of these red lines, virgin point of control. So I would want to see it stay back above 370 to see if there's something bigger. And just to be even more simpler too with this chart, watch the 200-day moving average. Right? If price happens to go above the 200-day moving average, then you could use that as your stop. Currently, and we still have a couple hours to go, so anything could happen. But I would be watching to see if it can close above the 200-day moving average. Platinum is another one too, where here's a platinum chart. Again, like if you're looking at a miner, I always look at the underlying commodity first and see what the story is. So there's been platinum's been something that I've been trading too through the ETF, which is PALL. And at this point,
that's palladium, isn't it?
Oh yeah, this is palladium. I'm sorry. Platinum is thank you, is PL, right? So this has started to kind of waken up too a little bit. And I would be watching to see if it can kind of maintain in here, maybe consolidate for a couple days, back and fill a little bit, and then 12.23 would be what I would be looking for there. But just to look at the underlying commodity.
Christian Fromhertz, there's a link to his Twitter and his group, Tribeca Trading Group, in the description of this video. Christian, always a pleasure, man. Stay safe. Try to keep your head on a swivel, I guess, is all I can say.
Thanks so much. I appreciate it, guys. Have a great day.
All right. I want to go to Apple, but before I do that, I just saw this really good tweet go by. Today is, of course, International Women's Day, and I saw this tweet from Y-Charts that looked at there's 31, I think the number is 31. There's 31 companies out of the S&P 500 that have women CEOs. Okay. If you put those 31 companies in an index and compare that performance to the S&P 500 over the last 10 years, the 31 women-led companies crush it. Just look at this. Look at this outperformance. Purple is the 31 companies led by women in the S&P. Orange is the rest of the S&P.
Oh, shoot. They have a list. I was going to try to guess as many as I could. AMD was the first one I thought of.
AMD
Group.
is a
Bumble. Big one. Okay, CBS.
GM is an obvious one. NASDAQ is match. Anyway, I guess the takeaway here is invest in companies led by women, and I wonder if
there are other factors. Like
I don't know.
Yeah.
Obviously, this is sort of a little bit tongue in cheek because not all these companies have been led by women for the last 10 years. So
well, and that's what I'm saying too. Like
but
maybe
the point still stands.
A company that is like willing to hire a woman as a CEO has other things, other attributes that other companies don't have.
Yeah, maybe. That make it a good company, you're saying.
Right.
Yeah, maybe.
Like it's open-minded and whatever. Like there might be other factors that are included. That's really interesting though.
Yeah. Okay, I want to go to Apple because as I mentioned, the event's going on right now.
New iPad Air.
We can't stream that because Apple will get very, very angry if we do. But we can show you all the headlines in Benzinga Pro that we're missing as we do this show. So here we go. Bunch of headlines. Let's run through these and let's go chronological order here. So I saw this headline already. Baseball. If there ever is baseball ever again, there will be Friday Night Baseball exclusively on Apple TV Plus. This is going to be a theme now. More and more sports leagues are going to be going onto exclusive platforms. Apple TV Plus here, Paramount there, or Netflix there, Amazon there. Right.
Yeah. I mean, NFL is doing Thursday Night Football exclusively on Amazon Prime, which actually, I will say, Amazon has some cool attributes to its broadcast of the NFL.
I've never seen it.
They have like an X-ray feature where you can I don't know, like if you're on a computer, you can like mouse over and read stats of like whatever player just made a play. Like they're trying to do some cool, innovative stuff. And if any company has the money and the means to do that, well, Amazon and Apple. So I'm curious to see how they try to kind of, make the experience more immersive, kind of use some of its tech and tools to revitalize a 50-year-old
format
of broadcasting a baseball game. Like it hasn't changed. Like the broadcast of a baseball game has not changed that much in the last 30, 40 years.
I mean,
HD.
There have been incremental improvements, but you're right. Broadly speaking, the format hasn't changed. Aaron just dropped something.
That's Apple. What? It was my AirPods. Don't worry about it, Aaron.
Okay, going back to Apple, they announced a iPad Air with an M1 chip, starting at $599. They talked about the iPhone already. Let's see. New M1 Ultra chip. What else are we seeing? Looks like that's kind of it, right?
Yeah, I mean, this is the same event where they released like the AirTags last year.
Yo,
Aaron Thomas is pissed there's no M2 chip. He's heated.
Producer Aaron Thomas is not happy right now.
He's not happy.
He's in a bad mood.
He might need nap time or something.
Christian Gallagher, that's a very good point on the Manning cast.
Yeah, that was innovative from Disney and ESPN. But yeah, I mean, I'm looking forward to. I know Amazon is also, I believe, has the rights to broadcast a couple of PGA events, or they're doing like some sort of golf content, which I'm excited about. Yeah, I mean,
speaking of, how's my Callaway doing? Oh God, what did I do?
How is so?
What a mistake!
Now Callaway's at its pre-COVID levels, which again,
what a mistake.
We talked about this with Netflix. I mean, some of these companies that are at their pre-COVID levels really have had significant growth in that 2-year span. Callaway's one of them. I mean, Callaway's sales broke records during COVID, and the stock price doesn't reflect it.
Yeah, well, I just want to address this comment first. It's not just you. So it's everything just turned again.
Well, again, it's just like we talked about. Not everything just turns. Chevron, oil, and stuff. Those are going back up.
No, so they've turned.
Callaway is going down.
Jason Razek, you want to come on the show? Oh gosh, I didn't. That wasn't a serious. That wasn't a serious thing.
So what's Callaway at right now?
2170.
Yeah, I own it, Raz.
So I bought more Callaway yesterday.
Oh, you and me. I didn't buy it yesterday. But.
So I went to this Michigan golf show on Sunday, and it was the most packed thing I've ever seen. I think between Topgolf and Callaway, I really need to study the financials. I need to read the last I need to read the quarterlies just to see how the numbers are being made up, like where the components is, where the profit is for Topgolf. I want to see what the expansion plans are. But it's one of the very few experiences that you can go outside, enjoy, and have an activity. I mean, movie theaters used to be that. Topgolf was packed. I checked that out. Callaway cut their Phil Mickelson deal, and
I saw that.
they probably, in essence, may save a little bit of money. But Callaway has a huge name, has huge golfers in its portfolio. They have some new products coming out. I like Callaway. I've been buying it since 28 down to 21. If it breaks 20, I will buy more. But can we get the CEO on? Has anyone reached out to the CEO for Callaway? Because I do have some questions on expansion. I think this stock's at 40 or 50 a year from now.
Wow.
You could be like a Carl Icahn investor and get in there and shake some things up, make the business moves Callaway needs to make that next step.
Well, so speaking of that, speaking of what you're talking about, there's these programs where you pay a subscription fee and then automatically you get a new car. So like an Apple computer. Wait, I'm on the phone right now. What is going on? I didn't mean to call you as a butt dial, Seth. I'm on the Benzinga show. Sorry. Wow. Okay.
Wait, who'd you just butt dial?
Seth, this guy Seth Rod. I don't know, big investor.
All right.
Seth Marin. I don't know. So I think if Callaway could somehow, like an Apple computer introduced, computers upgrades.
Oh, like I get a new Callaway driver every year.
It's something to that regard. And every 2 years, you start building a subscription fee business. Or it's a warranty thing. So if you get a mark, so I have a mark on my driver right now. I would have paid like a warranty thing. There's a lot of things like that these companies can do to make so much added revenue, but they don't do it right now because they just focus on the club innovation. They're not focusing on insurance. Like you guys talk about Tesla and how Tesla's going to make money long term. One of my guys who gave me Tesla before anyone knew what Tesla was, he thinks the way Tesla's making money long term is on insurance. So there's derivative streams of income that Callaway is not approaching that I think it can, and I think it can do very well in it.
Awesome.
So that's my take on Callaway, but is it one you need to buy today? Listen, the stock that was at 28 now is at 21. Could it break 20? Sure. I just think that it's one of the very few pure golf plays that has diversified with Topgolf, and Topgolf to me seems like it's doing well. If you guys listening see something different, let me know.
And yeah, here's that chart. Raz, real fast, did you see the little happy birthday gift we made for you?
No, I did not.
There it is. Happy birthday. Belated birthday yesterday.
I was going to come on the show yesterday when you and Dennis and Dennis and Joel were on.
Yeah.
But then I'm like, it'll be too great.
Then he just said, wait, no. Now that you're here, you didn't respond to my Slack. Thursday, are you available? Pre-market prep. Thursday morning.
I think so.
Okay. He thinks so, he said.
Yeah.
I want to know, Raz, what was this golf event you were at?
Dude, come on. He didn't invite you. Get over it.
Get over it. Every day, Jason's taking Josh to like a new.
This was not cool by any means. There's the suburban show place in Michigan. There's probably 3,000 people there, and they had every golf thing you could imagine. A lot of golf exchanges, balls. Yeah. Right. What I was going there was to check out AstroTurf. I wanted to put a putting green in my backyard. So I wanted to see AstroTurf. There was that one AstroTurf vendor that built a 17,000 square foot thing.
Oh, it was an expo. It was a golf expo.
Yes.
Okay.
So if you guys want to see what I'm talking about, Google Mark. It should be on our freaking site, but it's not. Google Mark Wahlberg's backyard. Why can't we do best backyards on Benzinga on a Saturday? Why can't we do that article?
I don't know.
So best backyards. Google Mark Wahlberg's backyard. That's what we want to do.
Well, maybe you took us to more cool stuff. We'd be doing more of that.
Excuse me. You're the last person.
Are you kidding me?
You go to everything.
Are you kidding me right now?
I didn't get to go see the dunk contest. Josh got shoes from Obi Toppin.
Aaron, no one here has been to more shit than you.
Yeah.
No one here has been to more stuff.
Josh did get shoes from the slam dunk champion, Obi Toppin.
Yeah.
What are they saying in the chat?
I know. See, Randy would like that too.
They're signed, and the shoes are the sickest shoes I've ever seen. I'll bring them in tomorrow.
Okay.
Everyone,
guys.
Peyton Manning, Eli Manning. Mike Tyson's coming to. I think Mike Tyson's coming to the Benzinga I think Mike Tyson's coming to the Benzinga Cannabis event. bzcannabis.com. If you're in Miami, 420, 421, meet Mike Tyson. Chris Webber. Al Harrington.
Use the discount code in the description. It shows 30 to get 30% off your ticket.
I'm going to see if I can get Dave Portnoy to come. He'll be there too. He'll be in Miami. I'm not saying he's coming, but if you guys know the Nelk Boys, I'll get Steve Will Do It to come. Okay. If you guys know who that is. Do you know who that is?
Say it again. Sorry.
Whatever happened to the prank that you were going to do last Thursday on the ice when you go?
Oh, he did it. He did it. It was funny.
Play it for Jason right now.
No. Spencer, tell me real quick.
We can't do it right now.
Before you bring on Tim, did he go up to people and say, "Can you take a picture?"
He went up to a woman on the ice rink. If you missed him on Friday's show, and he said, "Would you please take a picture?" And she said, "Sure." And then she was holding his phone, and then he was like, no, not me, just of the building. And then she was
I kept moving back, and she was trying to like skate backwards to like get me in the picture, and I just kept moving back with her, and she had no clue what was going on. It was hilarious.
It was funny.
So you only did 1 minute. So what I'm saying is tomorrow for 20, you can go to Tim and say, for tomorrow for 20 minutes, just go do that to like 7 people.
All right.
Why can't we do that? Make stuff entertaining. We need.
I get to go to the next dunk contest.
Like we're at almost 150,000 subscribers. We need to get to 1 million. Do 20 pranks. You're our prank guy, okay?
All right.
Spencer, he's the awkward prank guy. What's wrong with that?
Nothing is wrong with that. I didn't say anything.
Okay, looks like you got all pithy at me.
No.
Luke was complimenting you last night, Spencer.
Luke was?
Yeah, he thinks. Yeah, I shouldn't get into it because it's like
please tell.
Spencer's ego is
so out of control.
His head is.
Wait, does the soundboard?
I'm surprised it even fits. I'm surprised it even fits the door.
Does the soundboard work?
Yes.
Let me hear a sound.
All right, here.
You're not wearing headphones.
I don't need to wear
What
headphones.
do you want?
Tim, I'm sorry, man. This is what happens.
There's no sound. What? See, this is BS.
Yo, producer.
No sound. Oh, I got it. I need one more. Oh, that's boring. Okay. I guess I've been cut.
That's it. That's what that means. Jason Raznick, everyone. Round of applause. All right. We'll get him. And he just decides to walk in front of the thing because why wouldn't he do that? All right. Let's bring on Tim Quast, Market Structure Edge. If you were here about an hour and a half ago, I mentioned that I've got a discount code for you to share for Market Structure Edge. And I was waiting to bring Tim on to share it. So let's bring Tim on the show right now, and we can talk about what he's watching and then give you that code. Yo, what up, Tim? How we doing?
Well, that was very entertaining.
I'm glad somebody thinks so. How are we looking out there, man? It's been a weird day of several reversals. We've now reversed for like the third or fourth time now. Just intraday. I mean, you shot me a note earlier. You said you were watching. What do you say? You said yesterday you talked about Splunk, right?
Yeah.
So we could check in on that, but I'm just curious what you're seeing right now in terms of supply and demand.
Well, you remember that on pre-market prep, and I noticed that Raz was doing the Dennis dance, which it did look awfully similar. He'd have to have a license from Dennis to do that,
perhaps.
I believe. So there could be a copyright violation, but but you'll recall that on pre-market prep we talked about how the data indicated a move away from the big and stable stocks back toward tech. And I don't know I haven't looked closely to see what led the rallies today, but I think it was primarily tech, right?
It was everything. It's so strange, Tim. What, like an hour and a half ago now, or whenever the heck Biden was done speaking, everything reversed. So what was up, which was oil and defense stocks, those all turned down. Everything else was down. Those all turned up. And then that was the way it was until, about a half hour ago now, where everything just kind of reversed again.
So
I don't know.
This is what happens when 53% of market prices are set by high-frequency traders. If fast trading machines set prices, they're going to change direction based on what you could call the tick data. So as bids and offers change, the one thing that will explode around those is fast trading. We measure those on Market Structure Edge. You can see which behavior is responsible for doing this, and that behavior has prevailed all over the market. If you looked at the last 5 trading days, investment behavior in the broad market and in tech about the same, down 8%. There continues to be some passive selling in tech, so tech was worse than the broad market. Nasdaq in bear territory, down 20%. So, but half the S&P 500 is too. But the moment that changes, high frequency traders and IEX put out some great data. IEX is a stock exchange. It was the topic of this book by Michael Lewis called Flash Boys. They put out some great data around how customer orders affect the market where there would be an investor involved. So let's say Morgan Stanley has an investor and they're working a trade, and what effect that has on how the price changes versus what happens when, say, no offense to Citadel or Hudson River Trading or Jane Street, firms that are principally principal traders, proprietary traders, what effect they have. And it's a factor of 200. The way that high-speed traders affect the market versus a customer order is 200 times greater. So when the market reverses direction like that, you can know implicitly that is not the behavior of rational people. That is the waxing and waning of the underlying interest by investors. So if investors come into the market, woo, the prices take off. If they stop what they're doing, boom, the prices go down. Now, why is it so volatile? Well, because whatever the 20-day baked-in volatility is the volatility that machines will impute to the market, and it will become more volatile. So you have to how do you deal with that? That's the hard part. Because I'm sure that one could have said yesterday after I said, well, look at these trends. I mean, it looks like tech could do pretty well. And then tech falls off the cliff, right? And so you say, well, what's Quast talking about? I mean, the tech just got demolished. Well, it's not the way I think about it. I think about how supply demand changes, and then a number of days, could be 1, 2 days, could be 5 days, will affect and change the market, because that's the only way to successfully navigate a market where machines are so much faster than everybody else. That's how I would describe it.
Yeah, Tim, I have a rather embarrassing question to ask you. There was a firm. This is really embarrassing because I saw a Twitter thread from the CEO, but I don't remember. What's the name of that firm? All I'm going to tell you, all I can say is it starts with an R. It's like a high freak firm, they're market makers.
Okay.
God, oh my gosh. I'm trying to, because there was a Twitter thread.
Okay. Well, you're not thinking of Virtu. Are you thinking of Virtu,
no.
Doug Seafood?
No, I'm not thinking of Doug Seafood. I'm not thinking of
Okay.
And there was a Twitter thread about, I told you about the Jon Stewart thing, how there was they were talking about the market structure thing on Jon Stewart's show, and he had a good, what I thought was a very good response. It was the CEO of this firm, and I'm blanking on it right now. I want to get your thoughts on it, but I can't get your thoughts on it until I bring it up, and I can't bring it up to remember what the name of the damn firm was. Okay, if it comes to me in the next 10 minutes, we're going to talk about it, but if not, then that's really a shame.
So, by the way, I heard Jason Raznick mention apparently one of the investors, Seth Marin. So there's a big market structure name. Seth Marin, if indeed the case, he's the guy who started LiquidNet.
Yeah.
One of the great market structure firms in the markets. Anyway, little tidbit. Yeah.
Yeah, he's been to our Benzinga FinTech Awards, which you've been a winner of. Okay, so wait, let's put that conversation aside for a second. If it comes to me, I'll great. If not, then that's okay. I'm not thinking of Renaissance tea. Let's go to the market here, and let's just go overall, if you can. If we can pull market structure age, and let's just look at the Qs versus SPY or whatever, and just see what's happening out there.
Yeah, absolutely. And while I'm doing this, I should mention, since you were talking about Callaway, that if you want to, the only thing, here's Callaway over the last year, down 30%, right? So the only thing to do is buy it when it's a 1 and let it go all the way to 10. And when it returns below 5, sell it. That would give you 8% over the last year, because it spends so much time below 5. That's the problem. So it's not, you'd have to tell Jason to save his time wading through all the fundamentals, because that won't do it. And you have to trade supply and demand. That'll do it. Okay, let's go over to the, but I just thought I'd point that out. I mean, if you can make money trading a stock that declines, but you have to buy the waxing and waning of supply and demand. That's my belief. So that's a good lead. Look, it's not the same as long-term buying and holding. I get that.
Rosenblatt is who I was thinking of.
Rosenblatt. Oh, sure. I know.
Rosenblatt.
I know a number of the team there. Joe Goronsky, and they're great market structure people. So what was his answer? I would like.
So it was. This is a thread. It was from Justin Shack. Yeah,
I know Justin. Yep.
Yeah, I don't know him at all, but he had what I thought was a very good response to John Stewart's segment about whatever, however you want to characterize it, about the GameStop market structure madness thing that happened last year, or that is still going on, really. I just put the link, by the way, to this thread in the chat. And Justin's take was basically, you can beat the hedge funds simply by buying broad-based index funds and holding. That's how you really beat them. Trying to beat them at their own game is sort of a fool's errand. And a lot of his, and this is maybe an unpopular opinion, so I want to tread lightly because I don't want to get canceled. But his take, and again, he has obviously a bias because he's coming at this from his firm's point of view. But I kind of agree with it, which is like, there's a lot of misplaced anger out there. People are conflating wealth inequality with the fact that the market is rigged against them and all these things that happened. And his take was basically came down to, fees are at the lowest they've ever been. It is easier than ever to invest. And it is easy to not play the same game as the hedge funds and just simply buy index funds and hold them for years and years. And that's how you win the game. And that was more or less his take. A lot of the anger is just misdirected, he thinks. And I kind of agree with it, honestly. So I just put the link to that in the chat.
Okay.
But it was
So
pretty
my
good take.
response, to me, without offense to Justin, it's an easy answer. The easy answer that all the people who have been market watchers for significant periods of time will say is, the trouble is, you can't time the market and you can't out-trade the traders. All you can do is buy and hold. Well, okay, yeah. But look what's happened here just in the last month. I'll tell, and I don't want to. I want to make sure that I respond to this, because I think there's an important response to this.
Yeah.
But look at the NASDAQ. You know, the NASDAQ, it took the NASDAQ 20 years to go from 5,000 to 10,000. We got there in 2020. And then from the pandemic to November, we went from 10 to 7, almost 17,000. But now it's 12.7, right? So we've given, now if you were to calibrate the average annual return from 2000 to 2022 in the NASDAQ, it's not even keeping up with inflation. And we had this discussion before, long ago, a year ago, on Benzinga pre-market prep. The trouble is that buy and hold doesn't produce the returns one supposes. It did. It's becoming more challenging. And ask the Japanese what they think of the buy and hold strategy.
I know. That's always the answer. What is now do Japan? I want to just read the last two tweets from his thread. It was, like I said, a very good thread overall. Last two tweets. There's plenty wrong with the financial system, capitalism, politics, and how they interact with one another. Banning payment for order flow tomorrow ain't gonna fix it, dude. I could have written the entire episode in one sentence. Don't put a single cent into an individual stock if you can't afford to lose it. Period. End of story. That's it. I agree with a lot of his thread, and that was how he ended it, and I liked it a lot. So I just wanted to bring it up here because I heard about that, Christian. There was a documentary on HBO. I put it on my watch list. I'm gonna watch it. It's gonna piss me off. I'm gonna watch it anyway. But there's a thing all about the GameStop thing that I feel obligated to watch for work, so we can talk about it. But anyway, back to the market structure, Tim. So Callaway, let's move on from that. Let's go overall here. Okay,
and I want to tack on just one key thing about Justin's observations and his his point that it's very inexpensive to trade stocks. It's free. And there's broad access for retail money. That's not the problem. My problem with payment for order flow is not that retail money doesn't get good prices. I'm a retail trader. You're a retail trader.
Yeah.
I look that those things are good. My problem is that when you introduce into the market a majority of the participants whose principal purpose is changing the price, then none of us understand what we're buying. That's the problem. We don't know if the price is correct, and we don't really know what we're buying. And I don't think that those things are helpful. It's my problem with ETFs. It's not that I have a problem with the structure of ETFs. It's that people don't know what they're buying. They don't understand that they don't own anything but a derivative. I think if we're going to do what the regulations and the legislation call for in the U.S. equity market, which is to create a free and fair playing field so that competition can do its thing, that the market cannot be biased to the advantage of one constituency. And it clearly is. And it distorts the market so that we all struggle. And it's happening both directions now. Aaron, you were talking about some of these stocks that are now trading below pre-pandemic levels, even though they've grown substantially. Well, how does that reflect fundamentals? If fundamentals drive the market, why is something that is producing more top line and bottom line returns than it did a year ago or 2 years ago now valued at a lower level? Well, it's a reflection of the distortions created by different purposes and time horizons in price setting. And I think that's very important for people to know. And that leads us into, market structure edge is all about beating the market by understanding how it works. You have to understand what you're participating in. And so the broad market right now, here's where it is. This is our way to think about what the condition is in the market. And all you have to know is that the purple part here is SPY. It's our pricing mechanism. And then the green part is supply and demand. And that when the market is between the 4 and the 6, that's where all the returns lie. This is statistically borne out over and over again. And when the market goes above the red line, statistically, the opportunity for returns diminishes to 0 or less. When the market drops below the green line, the opportunity for returns increases substantially. But all the returns occur between those lines. So where are we? Well, right at the moment, we're a 4. We're right back to the baseline where it should be. I agree. I think that there is a greater opportunity starting now for returns than additional losses. Now, how long that lasts is the trouble. And this goes back to the whole discussion about market structure. When 53% of market volume comes from parties whose investment horizon is a day or less, then the whole cycle in the market that everybody depends on shrinks dramatically. So how long is that cycle? Well, we may have an upcycle for about 8 days. It'll be lumpy. We'll be up and down, but I think into options expirations next week, there is a good chance that the market produces returns. And if this line stops rising, if you're using edge and this line right here, this green line stops rising and begins to fall again, leave, because the probability is you're going to give back your gains. And I realize that this flies in the face of what we've all learned. I'm old enough to have learned the Benjamin Graham bottom-up approach to investment, but I'm also young enough to understand that the rules changed. Reg MS changed things in 2007. Decimalization in 2001 changed things. Dodd-Frank changed things. The way that the market works today advantages following it waxing and waning supply and demand. So we just have to adapt to the way it is.
Before we go, Tim, I just want to mention the discount code that you were kind enough to send over. If you go to marketstructureedge.com and use the code on the screen, BZLive20, BZLive20. As I understand it, Tim, this is a one-time code that expires on, not next Friday. It expires
I think so.
the 18th.
I think that's right. So that
Yeah.
it's the client services team, but it's a 1 month opportunity to subscribe at a substantial discount, 20+% discount, and just give it a try. It's trading is not for everybody. Market structure is the great equalizer for all stocks. It is a fact that prices lie at the nexus of supply and demand, and that when they can diverge, prices tend to rise. When they converge, prices tend to fall. And so, give it a try. I mean, it's a way to understand how the market works today.
All right, Tim Quast, marketstructureedge.com. Always a pleasure, Tim. Have a good one.
Good to see you guys too. Thank you very
All right.
much.
I threw Tim a curveball there with the Rosenblatt. He was a good sport about that. Okay, we got to hop though because it's time for the roadmap. They just booked a really big guest, not for today, but for a future show that I want to.
Carol Baskin?
No. Well, no, but kind of reminded me of that in a way. Anyway,
I think that's the project is Cool Cats from the Cool Cats and Kittens.
You just ruined it. You just spoiled it.
Oh, was it supposed to be a surprise?
No, I don't know. I was going to let them do it, but I don't care. Whatever. Anyway, this stream's going to end. Go over to our NFT show, the roadmap, going live right now. Everyone smash that like button, subscribe, do all that good stuff. Check out Benzinga Pro. Check out the Benzinga Cannabis Conference at bzcannabis.com. Discount code for that in the description on YouTube. Code is shows 30 there. Everyone have a great rest of your day.
Stay green.
Stay green.